tryna see what's forming. Mad on the mic, yeah, you know we schooling. Options open, gotta keep it moving. Came from the bottom, now we analyzing trends. Wrist tight, stop loss, never break, never bend. Candles talking to me, I don't need new friends. Rocket scooter running plays, we ain't here to pretend. Numbers don't lie, but emotions do. Fear and greed, man, they cloud your view. Stick to the plan, we gon' see this through. Matt got the blueprint, let me show it to you. Yeah, trade smart, no FOMO, no chase. Money comes slow, but I keep my pace. Bag getting heavy, no time to waste. Rocket scooter, yeah, we setting the space. I see the breakout, volume on the rise. NQ moving, got that fire in my eyes. Never over leverage, gotta strategize. Profits compound, yeah, watch it maximize. They don't understand the grind, only see the shine. Back test, game strong, yeah, I put in time. Matt taught the method, now the stars align. Price, action talking, and I read between the lines. Yeah, money moves, but the mindset stay. Discipline first, that's the only way. Big wins, small wins, all gotta play. Rocket scooter up, we don't fade away. Numbers don't lie, but emotions do. Fear and greed, man, they cloud your view. Stick to the plan, we gon' see this through. Matt got the blueprint, let me show it to you. Yeah, trade smart, no FOMO, no chase. Money comes slow, but I keep my pace. Bag getting heavy, no time to waste. Rocket scooter, yeah, we setting the space. Yeah, let them lead the breakout, volume on the rise. NQ moving, got that fire in my eyes. Never over leverage, gotta strategize. Profits compound, yeah, watch it maximize. Yeah, money moves, but the mindset stay. Discipline first, that's the only way. Big wins, small wins, all gotta play. Rocket scooter up, we don't fade away. We don't fade away. Don't fade away. We don't fade away. All the fun, one emotion standing. Fear and greed, man, they cloud your view. Stick to the plan, we gon' see this through. Matt got the blueprint, let me show it to you. Money moves, but the mindset.
Oh, I'm sorry. I forgot to turn the sound back on. What's up? What's up? Tariffs. April 2nd, reciprocal tariff. Trump. Putting that back. The date stays in full force and trying to be charged additional 10% that day. Mexico and Canada tariffs on March the 4th. Trying to also charge another 10% that date. What? What are we doing? What are we doing with these tariffs? Market hates this news. Obviously, market's moving around a little bit. S&P down about 20 points on that. Let's get right into it, y'all. Good morning. What's up, friends? I have to like fix my part here so I can look extra sexy. I can do it on my camera. Oh, who needs a mirror when you got a camera? All right. Lip reading practice. That's the way to do it. All right. What up, y'all? Hold on. My glass is like smudged. You know what it is? Pickle licks my freaking face all the time. I'm laying on the couch. I'm just like, stop licking my glasses, bro. So anyways. Oh, some bad lip reading bins. Those are funny. All right. Nice clean day. We're inside the DD bands, looking awesome. Pretty good, pretty good, pretty good. Let's get pre-prepped for some possible red line action. If we get a pop day today, I don't know if we do, but if we do, oh, here it is right there. Boom, we got it. We'll check everything's kosher here. MHP and DD bands are bay. You know it, baby. You know it. Good morning, guys. Hold on. Let's see who's here. What's up? Buenos dias. Jason, Simon, Maga, Ian, Annie, Trade, Nix, Keegs, Garrett, Benny, Stu, Dom, Morris, Nadia, Mike, the GOAT. Thank you. Hydra, Stereo, Simon again, TRS, Francesco, Juniper. Any little blue. If I didn't say your name, I love you too. Whoever it is, love you all as well. Hit that like button. Yeah. Hit the rocket scooter, hit the like button. All right, let's go back and see if we got some impact lines. So I'm going to check to see. What we got over here? 6083 is it? Yep. Yep, that's it. 6083. As I call the same thing. Same place. What are you in? Are you there? That's way too far. Oh, you know what? We're gonna have the end of the day 4 days ago. We're dropping in about 30 minutes. A little tariff news. Questionable if I still think the market's gonna do what I think it's gonna do. Monthly map still looks pretty gnarly. We might get a really good update today and fulfilled tomorrow, like another internal day. NVIDIA earnings came out somewhat of a wash, which was good. But we already talked about this, you know, as we had said before that NVIDIA was already priced in for the exact range. Right? The S&P was going to be about 100 and 150 points. We calculated that based on NVIDIA's expectation. And NVIDIA did nothing in the moment, which means we effectively priced it in. So, interestingly enough, we didn't get a big change in the index, but the market direction is still what it is. See if we get some better signals today, like bull market, go to bull market. My 28 days class has helped you so much. Dude, I love to hear it. I love to hear it. That makes me super happy. What, like specifically, what is the part that helped you the most? Or what is like one change that you've noticed that you've done? That's what I always ask people. So the thing is that here, we'd have the same impact line here, but I think we already ran through it on the S&P 1, 2, 3, 4 days ago. Maybe not, a little check. This is a trick called illiquidity pivots. Now I know what I'm looking for. You guys might not know what I'm doing, but that's okay. Just follow along. These red lines are going to be bay today. Oh, never mind. This one won't have one, but S&P has one. So on upper red line breaks, retraceable on 6083. Make sure I mark them both. You stop shorting? Stop shorting so much? That's what a lot of people say. You'll find that, you know why you stop shorting so much? Not because I told you to stop shorting. You know why you stop shorting so much? You just get better at identifying the trend. And you realize the trend is mostly up. You realize something about the market. The market is usually trending up. So you're usually on the trend, the right side more often than not. 21,743. Ooh, that's like, wait a minute. Oh, there's one more. Nasdaq did have one. I knew it was a little high there. On this day, okay. There you are. This is our I'm calculating our upper target, our high today. You guys are gonna love this one. This is a great trick. 465. Oh yeah, there it is. There she goes. 465. You gotta realize that you're identifying the trend much better and that the trend is just mostly up. People call it the I short too much class, but they realize the I short too much phenomenon. It's not because it's not because, you know, shorting is bad. It's just that the trend is mostly up. There's so many more long opportunities than short ones. And when the short one lines up, we take it. And Matt made $7,000 something yesterday short in the market. I did the short that made sense. Did the DD band short, like always, DD ratio less than half. It was a clean, easy, it's textbook. Super textbook. On my journey to 100K with Tradeify, thanks for tuning in, guys. I'm going to go get my little new technique I'm doing to try to game that system. How to go straight to 100K. And you get a full, or straight to live. So 100K or 80K, whatever. My goal was 100, but 80 is the new rule they have. Okay. Get a little pencil tool here. Get ready to roll. There we go, baby. I took that. Well, not all of that, but I actually took I took this one actually. All right, let's take a look. Looking pretty solid here. Upper target's 465 NASDAQ if we get close to that. These bands are really solid for pivoting targets. Monthly map yesterday was very alarming. We're getting a new one today. Okay, so first things first. Greater market. Number one. I need to just automate greater market in here. I mean, this is super easy. DD less than half is my guess. We haven't changed much since yesterday. 2, SPY is going to still be above MHP because we didn't crash out overnight. This is the one bull setup, the one bull thread we're holding on to. Number 3, monthly maps are still very bearish, very bearish. One of the 3 things are bullish. I'm bullish. You know the rules. So yeah, so you guys said what are the 20 days courses? The 20 days $20 thing, right? $1 a class. What does it help you with, right? Stop shorting on less than 11. It's amazing. Oh, amazing. Shorting less. The 20 days class is absolutely mind blow. For me, it's the market mechanics. Only trading the direction of the market is giving you much more confidence in sticking with your trade. Size betting is the best part for you. Are NQ dynamic numbers in Discord correct? Someone in Discord is suggesting they're not. No, they're correct. I don't know why someone would suggest they're not, other than just guessing they're not. I ran them and checked them. They're good. They're different. They're farther away, right? And they're very similar to yesterday's numbers, but they're correct. Good thought, though. Actually planning to trade your pivots, waiting for your setups, having a plan, trends money, patience. Something short because no PDT roll. Matt Hooks, turn up your volume. I think they were asking because NQHP is the same for high and low. Oh, no, that's okay. Sometimes they're two. Okay, so they're 2 different correlations. And one is calculating the high end of the range, one's calculating the low end of the range. And if the high and low are equal to each other, are they? Then the range is on point. 319. Oh, yeah. Why do they have this one there? Yeah, that's fine. That's just what it calculates to be. Sometimes the OI doesn't change much. And so the answer is that there's practically no range, which is good. Okay. Monthly maps, guys. This is how you read it. Check it out. Don't forget to hit the like button. Would you like the song to remind you? Would you like the song to remind you? I'll give you the song to remind you while we're chilling. I gotta remember where I put all this stuff. Hold on.
Hit the like button. Rocket scooter. Yeah. Rocket scooter. Yeah. Hit the like button. Hit the like button. Rocket scooter. Yeah. Rocket scooter. Yeah. Hit the like button. Hit the like button.
Boom. Should hit it harder. The pencil tool I use is called Epic Pen. And I bought their lifetime license or whatever. It's very inexpensive. Oh, the news this morning. While you guys are hitting the like button, Trump is kind of like, it's nothing new. I mean, it's something that's unexpected. The market's kind of priced it in already, and it's already back up to where it started. We had the April 2 reciprocal tariff still remains in full force. Trying to be charged a 10% tariff on that date. And that's like the dollar versus everyone else went up. If you're a pairs trader, you'll notice that. We dipped and came kind of right back to where we started on NASDAQ. We also had some last night earnings, right? So we had NVIDIA was a big one. But the NVIDIA was already priced in as we speculated in our monthly maps class, right? We talked about that. Price about 2% change. Not much of a surprise, I guess. Well, I guess that's 5% is okay. 6% surprise. So NVIDIA was effectively pricing in the worst case scenario already. So that's you can pay attention to that. Today is Thursday, so we should have the employment numbers, or unemployment numbers coming through. Jobless claims. Core PCE and PCE was out today. Those came in slightly better than expected. Slightly bigger than expected, sorry. Slightly higher. Sorry, PCE is inflation related. Prices. Slightly higher. Continued jobless claims, with as long as you have them less, or about 2 million or less, you're good. This is noise, we're good. Nothing alarming there, nothing changing. This ticking up is interesting, but again, nothing alarming or changing. Let's look at the orders themselves and the month over month change. Okay, and we'll go to GDP. Was also this morning. It was flat, as you'd expect. Not really much has changed. Initial jobless claims also less than around 250 or so is pretty normal. So all the data came out pretty normal. Nothing is alarming. Nothing is threatening the health of the economy right now. We're good. News is good, as we always talk about. So we're about 250,000 is pretty normal for weekly unemployment filings. That's people that get laid off the first week. This is where they file. That's what they get. Guys, hit the like button. Everybody, bottom right. Thumbs up. Thumbs up. Thumbs up. I have a giveaway today, probably. Just FYI. I might be feeling happy. And tomorrow we're giving away 3 Elite Trader Funding free eval accounts. So all right. So initial jobless claims are good. Continuing jobless claims less than 2 million, which is really good on average for a bull market, bullish market. PC prices slightly going up. The core excludes food and energy and talks about the things people want to buy versus the things people have to buy. So this affects discretionary spending, right? So a little uptick there. And that number, GDP quarter-over-quarter growth still positive. The two signs you're in a healthy economy, not a recession, is your GDP quarter-over-quarter growth is positive, and market's already moving really high. Don't go to the DD band before we get the damn market open. Stop. Quarter-over-quarter growth is positive. This is not a telltale sign that recession is immediate. And employment is pretty normal. So this is the day that where you get to understand, are we even closer going to a recession? People aren't getting laid off any faster than before, and GDP is doing very well. So those are the two telltale signs you're not in a recession. GDP growth is positive per quarter, and your unemployment is not going up. Jobless claims not going up. So we're good. The jobless claims come out once a week, which is good. Helps you with understanding the full employment number, like the non-farms. But you're not expecting, that plus the jolts will help you understand the total non-farms out there. How many jobs, just how many workers, et cetera, et cetera. So there's no recession looming. This bear market's just like liquidation at the top. There's not really this bearish-ish market we're starting to hint at. The economy's still good. The news is still good. There's nothing really bad. Durable goods orders is always noise. It's hard to put a correlation to that one. I just look for outliers. Nothing crazy there. Same data point a second time. Yeah, we're good. So the rest of the day, we have pending home sales in 50 minutes. That might change some minds, but we'll see. Other than that, really nothing else. Some Fed speakers today. Tomorrow's going to be a bigger news day. PCE, core PCE, price index stuff. And then, of course, the Chicago PMI. Also, this is Chicago, right? It's not the full PMI, but it's usually a hint at something. It's just one city, but, still. Why is this title 71.k Tradeify? That's how much I made at the stream yesterday. So I usually report how much I made in the previous day. If I was to start the stream every day and say $0 Tradeify, then it would always say 0. because Tradeify versus MFFU for instant funding. Yeah, and I'm hearing a lot of good things about Take Profit. You guys really love Take Profit, as I found out. Yeah, it's always gonna be like what I made the day before. Didn't I stack before? Yeah, like when I start going on a streak, like on a new, yeah, I did that before. Like I usually like total instead of the day's game, like 50K total, 60K total, 80K total. If you guys like it like that, I can do it like that. I just change it up every once in a while. Just up to you guys. But yeah, you guys are loving TBT, and I'm gonna tell you guys, we almost are at the diamond tier, whatever the highest tier of TBT. If you guys use Take Profit Trader, feel free to use our code. We are almost at their highest tier discount, so 25% off. So our code is already extremely valuable. We've walked from 0 to 5, 10, 15, 20. We have 20% code right now, and only a few more of you guys need to use it, and then it turns into a 25% code. So just remember, use our codes use Rocket Scooter for all of your affiliate needs, all your prop firm needs. The affiliate code gives us money, and the money goes into development of the platform. We had our big meeting a couple days ago to talk about what we're coming out with. You guys are going to be excited about this. We talked about getting the probabilities on the charts. This was our big talk. We planned it out. We talked about what we had available, what we need to make, all the infrastructure change, historic liquidity maps, daily available, and real-time backtesting with those probabilities on the chart is what we talked about. We have a couple more things we're doing first to kind of straighten everything out. We have some modifications we're doing to resilience. We're going to create a hedge pressure resilience, a blue resilience to go with it all. That's going to be amazing. We just made an affiliate program for Rocket Scooter. For those of you that want to make a little side cash, introduce your friends or introduce the public to Rocket Scooter, we're going to create affiliate codes for some of you guys. We're going to beta test this week. The affiliate program is live on our test server. I've been playing with it a little bit. You guys that are always like asking me for years, can I get affiliate code for Rocket Scooter? I'm bringing friends to this thing. I'm going to check it out. We'd love to have you guys introduce our platform to folks. So we're going to make an affiliate program for that. So I'll be selecting some beta testers. You send me a DM that you want to check out for beta testing. That's awesome. Those of you who do get selected to beta test, you might be given a special discount. That's very nice out the door. So we'll see. Just for helping out. We are down inside. Let me zoom in on this so you guys can see it. A couple more cosmetic changes in the platform, and immediately our next step is start building this backtest thing. So starting this month, we will be building that. We have 2 more features that we're building on the marketplace itself. We're creating a one-on-one scheduling tool for people that want to schedule one-on-one meetings for any of our vendors. When I say marketplace, guys, not just we have Rocket Scooter, but we have a marketplace with hundreds of vendors on it that also run their businesses in our website. And so if you are a trade room or a trade Discord or whatever, and you want to run it, we have a Discord bot that manages Discord roles. We take payments, all that stuff. We run your business for you. In the trading world, we're creating a one-on-one scheduling app for vendors to create who do mentoring and stuff. That's pretty cool. And then we're actually going to work on creating an integration with TradingView itself, TradingView native. You guys might like hearing this. I don't know if it's going to be useful to you here if you're using Rocket Scooter, but some people sell TradingView indicators, not indicators for our platform. So we're going to create an API to connect your experience to your own TradingView. You'll be able to connect your TradingView account to your Rocket Scooter experience. For some enhanced features there, like checking out people's indicators and buying them through our marketplace and things like that. All right, monthly maps from yesterday. Now we have to get a new read in like 5 or 15 minutes, but we have been trading in a bear zone, which is not the best. Trading a bear zone, and if you look at where the price was now according to yesterday's map, it's bearish for the long haul. We get kind of like a bull breather day in here, but for the rest of the time, you can see that we're inside of this bear zone right here. So trading in a bear zone is not necessarily the best bull thing. And this goes all the way through March. Oh, you guys can see the axis there. So March, not good. Not good. So it could be a really interesting or bad February. And you got to kind of keep that in mind. That's S&P. QQQ looks no better. Guys, don't forget, everybody here, bottom right of your screen, click that thumbs up button. I want to see 150 people do it. If you do it, every time you click that like button, somebody, you know what I'm saying? Like a degen gets their wings. They come over here and find our stream as we hit recommended. We are going viral in the YouTube recommended feed according to analytics. It's happening to another friend right now. Most of you guys have found us to YouTube recommended, which is great. You know how that happens. You hit the like button. Yeah. So thank you for your help there, but everybody tap it a little bit. Hopefully we can keep one more person from stumbling into some nonsense and maybe hopefully checking out something much cooler in the mornings. All right, so Nasdaq's still in the same boat. Right? So you can see where prices in Nasdaq right here. Currently, if the map doesn't change too much, we do have waves of, this is a liquidation wave this week, and there's a stable week after that, and the market is roughly kind of like liquidating through March. It's not a good sign, and like the March looks very bleak. So February looks bad, March looks worse. Now again, we'll see this, and I'm gonna draw the bottom of the bull zones for you. Oops, so you can see like a little easier what this is. So what you're trying to look for, let me zoom in, is you're trying to see where the bottom of these bull zones are. Between bull and bear is where your liquidity is. You guys remember the rocket scooter motto? We find liquidity and we nailed it. Long it. So where's the liquidity? It's where the bulls and bears are, kind of split inside of here. And the bears are kind of right here, right? It's kind of like drawing this little path. And you can see through here is that the market starts to get slightly more volatile in the middle of March. And at least for the next maybe 1 to 2 weeks, there is bull liquidating. When you're deeper and deeper out of the money from that bull side, that's bulls liquidating, and we can see that. This is bears building a shorter position and deeper in bear territory. So the next 2 weeks are going to not be so good. And again, we're not done selling. The DD ratio was less than half yesterday. It's only happened like 6 times in the last year. So it's starting to turn around. Monthly maps bearish, DD ratio less than half, SPY is at MHP, and that's what saved us yesterday. Monthly gamma on SPY is positive, but that's about it. What I fully expect is a day, if anything, best case scenario, like a green retracement day, but we're immediately still going to go down. This market is not that hot. The liquidity pocket is what I look for to try to find that retracement right to the bull zone. So like, for instance, today, wherever that bull zone would be on the monthly map is usually like about a high. So we're talking about maybe like 100 points off the low or the S&P. So there's a pretty sizable move for that retracement. We already mapped it out where it can go. If today picks up a rally, about 60.83 is where that little liquidity pocket is. So on the longer scale, this is liquid. If we get some kind of bull run to go up here, that'd be lovely. And then the next day, we're back to doing this. It's not necessarily going to flip into a bull market yet. The signs aren't there, and the maps are showing you how people are positioned for a while. We could be in for 1 to 2 to 3 months of roughly selling, just a correction inside of a strong bull market. Now, again, don't be afraid of that. It's natural and pretty healthy. The economic data is completely beautifully lined up to be bullish. Nothing looks great. I mean, nothing looks terrible. There's no bad looming economic data. There's nothing that looks like a bubble. Everything just looks healthy. So this could be like our normal expectation. Remember, we had the Fitch downgrade, knocked us down for 3 months. We could just have liquidation knocking us down for 3 months. So the committed traders, you're going to look at 2 things. Okay. We're going to look at how the bulls and bears are kind of split up, this green and blue line. Whenever this green line is sloping down and this blue line is sloping down, which they both are, that is liquidation. And in that particular phase, it's illiquid liquidation, right? Because you don't have people covering shorts to go with it. Usually when you see them both slip down, like you see here, you end up with something like this, okay? Now, how long does it last? We don't know. But let me tell you a trick, okay? You can find the bottom so easy. I teach this trick. I taught this trick yesterday. Whenever the market maker, part 2. So liquid markets don't crash, number 1. So you want this green line and this blue line to fan out or pinch together. They're both sloping down for the weekly, so we know we're going to have some liquidation waves. But the minute that this red line is above 0 is always, 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 always going to start to lead towards where the bottom will be. So it depends on how quickly people dump to the dealers is when that wave ends. I'm going to teach you guys a trick on how to call the bottom. Now, I'm not going to blow up my accounts on the way there, but when I find the bottom, I'm going to be the first bull to that bull party, baby. So this guy up to here, you know, if the market spends like a month or two, like doing this, and once the dealers go positive, you got in that somewhere in that month, we're back up. So we'll see. 1, 2, 3 quarters down. Who knows? But let's pay attention there. Want the dealers to be positive, want the market to build some liquidity. But right now, sloping down. It's bad. All of our indicators show the badness. There's only one thing that's holding on to this bull market, and that's hedge pressure on the S&P for the monthlies. Monthly scale hedge pressure is still showing that it's okay, but the problem is that it's trading right up on the price, and it's right on the edge. And the stocks, as we look at this yellow line here, are in negative gamma territory. So SPY has very little power to hold on right now. Monthly hedge pressure is the monthly gamma exposure of dealers who sell options to the market makers of the stock. So in a quickie sense, you are a trader, this is you, who longs 1,000,000 shares, okay? I'm going to write the 1,000, just pretend 10,000, that means 1,000,000. You long 10,000 shares. And you bought it really rapidly to the market. It's a market order. There was no way to sell to you. And let's pretend in this scenario, you had a dealer on the other side of you, a market maker to the other side of your position for a moment. And a hedge, they were to buy 100 calls. Okay, so far so good. You guys understand this part? Minus 10,000 shares plus 100 calls. This is a neutral trade. Okay. And so this market maker grabbed those calls from another market maker, right? A guy who sells the options. They sold the 100 calls. So like everything like connects to itself. And this dealer who's short some calls is going to have to long the shares or short the shares or sell the shares, sorry, long or sell to balance the exposure of 100 calls. Those 100 calls are in the money. At Delta 50, they're going to buy 500 shares per call, right? So at Delta 60, they'll have 600, etc. And then at Delta 100, they'll have the full lot if they're Delta hedging. Either way, you have two dealers engaged in a trade with each other, and then you are engaged in a trade with this dealer as they're hedging. So while you're in a locked-in trade with this guy, with your active position of, I don't know, Apple or something, this person has Apple insurance with the calls on their short. And then the insurance salesman has exposure to Apple. If Apple goes up or down, they're forced to buy or sell, which locks them all the way back around to you. So the middleman found a trader for you to trade against. It's another dealer, and they're engaged in an options trade with the other dealer. Does it make sense so far? And it's not that simple. This is just the simplest way to understand it. Hedging goes in a big-ass circle. They may be hedging with futures, and the futures hedging with options hedging with stocks hedging with options. And it's just, it goes in like a big-ass circle where there's like a million links to the chain. Your risk is just passed around in a big circle, right? But in the simplest way to understand is that your long trade against this dealer, we identify these calls right here, and we find your position. From these calls, we identify where a bull is, where there's not a bear. You bought from a dealer because there wasn't a bear, so that's what's called a bull zone. You'll see that there's zones on our liquidity map. We can separate, watch when the market opens. It's gonna be really cool. We find exactly where you're engaged with trades when there's not a bear. Same thing with the bear zone. There's bears without a bull. And so we call that bull and bear zone. The other piece of this is called hedge pressure, which is this trade right here. The exposure of this guy having to long or short forced based on the exposure they have to those sold options is hedge pressure. So if an example is, if here's your option and price goes through that strike, this market maker is having to long right here. As price goes up, they got to long more, and they got to long more, and they got to long more if they're delta hedging. So hedge pressure shows you the net flux of, or the net maximum gamma of that flux of orders due to hedging. So like, essentially it's just a fancy way of saying maximize order flow due to hedging. So we calculate that gamma exposure of dealers. That makes sense? Wait, Rip Gene Hackman? No! No. Rest in peace. It's not unrelated. we're huge movie buffs here. That's sad. Him, his wife, and his dog. Wait, what happened? Foul play? Wait, what? Carbon monoxide leak or something? Foul play, like, related to what? Carbon monoxide? Oh, shit. Can I tell you something, though? As morbid as this sounds, you know I'm a chemical engineer, right? Can I tell you something? Carbon dioxide is like the most painless way to die. You just fall asleep and black out. It's the way to go. Not a bad way to go. The one thing I learned about being a chemical engineer working in the plants is the first thing they teach you is the million ways you can die in that plant. And I've worked around cyanide. I've worked around some pretty nasty stuff. Cyanide, too. Very painless. At least he didn't suffer. That's good. Could have been way, way, way worse. Like Weird Al's parents. Oh, no way. Oh, that's so sad. Yep. Cyanide and carbon monoxide have a higher binding affinity to the iron ions in the heme molecule or hemoglobin in your blood. So what happens is the oxygen is less preferentially bound to the iron than the carbon monoxide, because the structure of the atom or the molecule, it will like knock the oxygen out, and it will selectively bind, so that you basically just starve your blood cells of oxygen. So, Gene Hackman, I'm a huge fan of of all his movies, man. Like Royal Tenenbaums is like one of my favorite movies when I was younger. He was 95. Yeah, he is pretty old. But the thing is that what it says is that you're not like, it's not like choking on a, like, it's not like being in a fire and choking on smoke. It's not like drowning. When you cut off the oxygen supply to your brain, you just black out before you feel anything. So again, a morbid thought, but not really morbid. It's extremely painless. It's like your preferred way to go. Trust me. Organic Chem 101, yeah. It's not a bad way to go. You will black out within, like, I don't know, many seconds. You ever had somebody put you in like a sleeper hold? Dude, I was getting a massage one time at an Ashiatsu place, where they walk on your back. They do like the Asian inspired Thai massage. They walk on your back. I was laying on my back. They put a towel around my neck, and they were like stretching my neck. Within like 3 seconds, I just blacked out. And I woke up. And I'm like, did I just black out? And he's like, no, you okay? And I'm like, no, it just went dark for a second. I was like, wait, hold. I was like, stop for a minute. Like, you'd be a little rough. So, yeah, I did. I blacked out in a massage table one time. It's hilarious. Yeah, it's when you're laying on your back and they're stretching your neck, and she had like the towel was like U-shaped, so I had my neck in it, and she put her foot on my shoulder and was like stretching my neck. Literally, it was just like, I'm just sitting here. I'm like, this feels nice. Oh. And it's just like, whenever you get the, the thing that knocks you out for anesthesia, you just don't even feel it. It's just like, you just come to and you're like, wait, what happened? So as we learn, carbon monoxide is that kind of is like that. You'll just, within seconds of displacing the oxygen in your blood, you'll just black out. So, rest in peace, Mr. Hackman. At least it was rather painless, if that's what it was. That's just good. All right, baby, let's make some money. 1 minute till market opens. Greater markets can be a very interesting thing today. We got to really pay attention to this. If it's a bear market, obviously I'm going to wake up with bear setups in mind. If it's a bear market with bull liquidity, I'm still going to long it, as I've been doing. I've been doing very well, with my strats here. S&P likely has upward movement to some of these red lines. I'm liking it. Let's see what we get. Let's trade ES today, probably better. Res is good. At the super in the open, res is good. Okay, not bad. Take a small long just on res. I'll close it out if it doesn't add up, though. I'm longing before liquidity maps are out. Resilience is positive. I am longing. Take the open long. Good. Positive res. Good at the box. I am longing from here. Let's let liquidity map come through and support this. Oh, it's negative. No. I'm going to give it a second to wait, though. Bounce back up, baby. Oh, yeah. All right, bull day, guys. Woo. Woo. Okay. About 10 points low. I've got a long support here, which is good. Res is good. We're supporting the box, which is okay. I don't hate it. Let's look at QQQ. MHP on QQQ. Okay. If we break MHP, this market's dead, but ooh, even QQQ looks better. Oh, that's awesome. I love it. That's like literally right here, like right on the edge. Good. I mean, if it breaks, the market's dead, but this is perfect. It's perfect for a setup. Okay, I love it. Res is positive. Market's good. Oh, we're getting a nice little bounce here. Okay, good. Like I said, I'm taking a long at my strong pivot. I can't argue with that. Let's run it, baby. Let's run it, baby. Yeah. Let's go. Let's go. Illiquidity pocket, too. It's going to move quick, positive res, longing out the door. When res moved to 10 or 20, it looks pretty good. Pretty solid. At least the trade up to hedge pressure looks really great on NASDAQ. S&P looks pretty much the same. A little bit of a gap and go situation. I'm going to be so overeager to like. And guys, don't forget to hit that like button. Bottom right of the screen, you can like, hit that thumbs up if you love the stream. We love you. SPY is getting unbounded to the top. Move to DD band is perfect. Monthly maps are back. DD ratio is still bad, but monthly maps are back. Whoa, whoa, at least for now. Stable map. Stable map for now. That's good to see. Oops, that's really good to see. Now again, I'm still worried about the setup. Market can crash out and the market will die today if we lose MHP, but that's good. Monthly maps for now do look bullish. DD ratio is still less than half. Be very careful. We know that DD ratio less than half is resistance off of the band. So this was the trade from yesterday. It's the same setup than yesterday, right? Upper move on liquidity map moves upward to the band. That's about a 30-point rip. That's about a 3-to-1 trade. I am in love with this setup. Fingers crossed. NASDAQ is still in bear territory with liquidation. So again, bull market's not bad, guys, but it is showing signs of a possible green day in this bear setup we have. So remember today, we do have long potential off of the box if res stays positive. Res is definitely very positive. 50%, 27. 50 and 27 is really strong for bounce potential here. Any downside is just 6 points, 7 points, so I'm willing to hold through it. So right about here is that bull zone support that I'm looking to trade off of. I love it. VIX is in a nice stable place too. Yeah, we're going to go up. Hopefully straight up from here. I'd like to go up to red line today. Be really nice. VIX nice in a decay pattern, which is good. So this is a relaxing day. There's nothing alarming today, guys. This is really nice. This is good to see. Finally, a nice little green day to start us off. Bull zone support still live. Yeah, so even with DD less than half, I still take a bull zone trade with a smaller position. Absolutely, every single time. It's EST for a reason. So This is a support just with a smaller position. Oh, 100% of the time. Nasdaq's the one that's kind of selling though. So let's kind of watch this one. The S&P is the one that's getting some oomph, but Nasdaq is not. I still feel all right about it. But Nasdaq has the stronger resilience. Yeah, so if the DD ratio less than half, I still take the long, but with a medium position instead of a large position. You can see right here in the map, if you were to zoom in over here at this bullseye bottom, kind of shows you that same setup. Number one, if the DD is less than half, I always bet to the bull side. I always take the bull bet. I never don't take the bull bet. I never don't take the bull bet. When it exists, daddy likes to take it. Ooh, let's go, baby. Come on, let's roll. Upper DD band. So this is a pretty solid setup. This is yesterday's trade plan all over again. We're going to repeat, baby. Everyone hit that like button, please. Bottom right of the screen. Jesus fucking Christ, you guys. I'm going to sit here and eat my breakfast and chill. There's 1 out of 4 people can click a single button. Tip your waiter for the free information. Click it, click it, click it. Bottom right, bottom right. We'll sit here in the dark. I'll turn the lights back on when you guys click it. I'm about to play the song. You guys are getting handed free visibility. You go tip your waiter, baby. Tip that waiter. Playing the song. Yeah, you're gonna hear the song. When we get to 300, I'll turn it back on. $300. Keep going, keep going, keep going, keep going. Everyone click the thumbs up button. Smash the like button. Rocket Scooter. Yeah. Guys, I love you. I love you so much. But man, for my 6 hours of entertainment that's free for you, I should have to ask something 5 times, 10 times. It makes me very sad. My heart is broke. My heart is broken. My heart is broken. Nasdaq is starting to look really stupid. All right, market is trying to get back to its usual behavior of trying to sell. So I'm going to be very careful here. Nasdaq's the one that's right on the edge. So let me draw this a little lower. You guys can see that. So DD less than half is resistance from there, but I think we'll walk right up to it. Market's nice and clean. Worst case scenario is it tries to sell and then finds a path and there it keeps going. But today looks like a pretty solid day. Let's make sure that the S&P stocks aren't selling too bad. But yeah, this looks like a nice little clean gap and go. I do like it. I don't hate it. Rocket Scooter. Yeah. Hit the like button. Rocket Scooter. Nasdaq is the one that's trying to sell, but it has the better ratio. Nasdaq's the cleaner looking one. But it's the one that kind of has like the most amount of selling pressure right now, but Nasdaq is just clean right here off of the bottom, off of the MHP. So, like I said, everything's, and again, the market can collapse through this and we just have a big losing day. It's very, very possible. This thing happens. Now, MHP is a nice little place to tap along in a Nasdaq. That is the place to take a trade on Nasdaq if there was one to take. Watching the bid here. A little overshoot of bulls on bottom. Yeah, this is a long entry right here on Nasdaq. Everything's clean. Now, MHP res is less than 0, so it might little overshoot here, but bulls on bottom is all liquid right in here. Ooh, that Nasdaq is crazy today. All things. Nasdaq is the one that's trying to die. Things look good. Things look good, though. Here it is. There's the entry point. Let's see what we get. Just for funsies. Let me show you this entry. Just for funsies. Let's play it. What? Okay. Never mind. Forget the funsies. Let's close that. And it walks up and dies. No, res is good. Everything still looks good across the board. There's a liquidity pocket down at the bottom for Nasdaq. I still feel all right about it. But man, the bear market-ish is still kind of there, but we'll see what we got. Usually it'll overshoot and you're still okay, but the market's still liquid in here. So let's see what we got. Things are still looking solid here. Half gap support. I don't know if it's just the tariffs or whatever, but people are just walking through and yanking through. Breaking MHP is the last piece of the thing that was that we didn't want to see. So there's an irrational signal here. That's going to be pretty bad for today if this doesn't bounce up here. Come on, Nasdaq. Let's go back to SPY. So Nasdaq is a bounce point in like 5 points. The rest of the market's dead. This is a little unusual because you expect this liquidity to hold, but we'll see. I'm willing to still hang in on this one. I'm okay on this one. Okay. Give me 1 second. I'm going to be right back. Well, actually, let me watch this and I'll be right back. Hold on. I forget that I have a BRB screen. Hold on, be right back. Get some water. This is unusually sharp on this downward move. Holy God, this was crazy. Wow. All right, liquidity pocket. I know I took some heat on this one, but let's play. Let's play it. That's a little much, but this is the bounce point if there ever was. This was too much. Way too much. Way too much move. There was no volatility. There was nothing planned. Market just walked up and started liquidating. Jeez Louise. Well, I don't think we crashed today, but dude, that was a little unusual. I'll hang on to that one. That was a little crazy. Signs are decent. Like, no, signs aren't bad. I wasn't expecting that at all. I was expecting at least to fulfill all the way to the top. Then I was going to short it. Damn it. Let's still hang on, though. It's a little liquidity pocket. Market's still good here. That was a little much, but let's see what we get here. Right about 275. I hate when market does this, but that's okay. I was planning for it. Res is still decent at half cap. Okay. Why the hell not? Let's let her rip, baby. That was like a little alarming. That wasn't expected today. Not expected at all. Bulls on bottom, DD ratio less than half and improving while we're there. It's actually pretty decent. So as markets are falling and DD ratio goes up, it means stocks are in illiquidity pockets. We've covered that before. But then I just hit this with a medium position, which is my plan all along. It's being a medium spot to get the bounce there. It's good. I don't hate that idea. Not bad. A bear trap today? I think so. We'll see. Signs are decent, so took a little heat on that, but I think I'm all right. But we'll see. Let one little overshoot down in here. We'll test the liquidity pocket one more time. This is EST. I always take that trade. If we bounce, if we support, I always long the next resistance, which is there. If resilience is greater than 0, we can fill that gap really quick. So we'll see. Now, again, this is a little unusual. Market just is liquidating really hard, and I'm a little nervous about this because we keep saying the bear market's coming, right? And so we feel it, but man, I feel like that this was not usual. I mean, the markets have gapped up and the stocks are immediately selling at the open. So I think I still think it's a good long setup. Dare I? My new medium is 5. I'm trying to play the Tradeifys longer. A little harder. Let's see if we get something better. Let's see if we get a hold here. This is very, if this squeezes me, I'm going to be very confused. There's a lot of bull pressure there. Do I risk it? 5 is my new medium. Remember, I'm trading bigger on these things now. I'll do 4. The liquidity pocket. I mean, this is usually what I do. I like to find liquidity and I like to long it. Market is being very unforgiving today. All right. Bounce here. I took the small gap and go with 2. Now I'm adding my position in liquidity pocket. So really here, I mean, there's no sign that the market has any, like we're opening bullish and people are just selling at the high. And the liquidation, that potential is there. Monthly map was showing that, right? So, but monthly maps are looking better now. So I think this is maybe a bear trap for today. But this and then this, it's just trying. It's trying to not play ball, you know. This market's trying to be really mean to everybody. We're betting on that hedge pressure to hold right here in this liquidity pocket to hold this liquid. So dangerous. It's a dangerous spot right here, but I am risking a little bigger than normal. We want to hold this liquidity pocket here. Remember, I'm going for like 5 to 10K days now instead. So my drawdown's going to be a little bigger than what you usually will see. That's it. If it doesn't hold this bounce here, then I'm going to be a little... Now, DD ratio, I still try to take the long potential there. But this ratio is showing this deterioration of the bull side in the bull market. So this is going for roughly like 7 or 8K profit. With about 3 or 4K. This is around the edge of the loss if I might close this. I still hold this every single time though. I'm out. Let's wait. Let me wait till it comes back. Yeah, bye-bye market. This one sucks. No. Yeah, the NQ trade I'm not in. I still think it's going to bounce. I still think it's going to bounce. We're still good. I still feel like we're good. But we'll see. I still think we're going to bounce, even though that ratio is not so great. Still some liquidity here. But let's wait though. Let's reclaim it and then we'll take it. Dude, this is just incredible. I mean, I think that the market is having a really fun time. Like, trying to figure out, and we know the bear market's coming. We talked about it yesterday, but man, boy, we lost all points of liquidity. This is the last piece of the bounce right here. This is it. If we lose this, then the market's dead. Now, this is crazy because this was not expected at all. This happens though. Back to like another shit market again. So normally, bull zone is what we expect to bounce. Liquidity pocket we expect to bounce. And while it is trying to do that, with the resilience numbers being positive, we expect this to go to the top. Hold on 1 second. I got to message my developer real quick. Goodbye, market. Jesus. Fuck this day. Yeah, it's definitely getting really bad. So I'm going to say, as we're breaking through MHP and trying to break through MHP, I've got nothing to say about this any further, guys, other than, you know, this market has effectively just plowed through what liquidity there was, not even trying to stop. And while we did gap up and things looked really great on the S&P, which is very alarming, the market still just sold off. And we said that in a monthly map, the market looked bearish, but we didn't think the market was going to just continue to sell. This is really bad. And so, you know, like I said, everything's starting to fail. I would be very careful doing anything from here. We thought it was going to go up before it comes down, though, which is whatever. Yeah, the market is extremely bearish. We've been talking about it for the last 4 days. But either case, you're still going to find like liquidity or bounces in bear market. So, yeah, once I lost these levels, I'm like, I'm out of this. So we'll let this guy play around. You know, it happens. Not every day is a winning day. But, you know, we'll see what we can do going forward with this. Man, what a brutal day. Well, not to say avoid longs. I would just say avoid longing bigger, right? There's always good longs. There's always good shorts to trade in both markets. And even so inside of here, the stocks have overshot. I mean, the index is overshot, but the stocks have still gapped and gone. It's really weird to see this. And we just had a little bit of instant volatility. And I think this is a news event off the tariffs, really. This is not the natural state of today's market. So, oof. Yeah. I would say that today, look out for here as a final nod of support today. Usually you're going to get possible longs off of this. Is one of the last places to look for. Not every day is a fun day, but hey, this market, when it gets brutal, don't be discouraged. A lot of you guys are going to feel like, man, this is hard. Markets will do this for like a month or less at a time, where the bull market transitions to a bear market, and you're bullish at the start of the day, right? Everything's nice and bullish and a good setup, and the market just clobbers through it. You know, 20% of the time, it doesn't do that. 90% of the time on both sides doesn't do that. So as we're transitioning into this bear market, as we keep talking about every single day, the CD ratio is deteriorating and stuff. The market's going to do crazy things. It's not going to be the easiest way to trade. So NVIDIA is going to be where we're looking for today. Just to hold up. God, man. Lame. Yeah, NVIDIA is the market today. And NVIDIA, while market open liquid, NVIDIA just plows through resistances. So nothing you can do. Trust me when I say nothing you can do other than flipping the coin the right direction. There's nobody's indicators or tools that told you the market was going to go from liquid to selling. This is just pure brute force dumping. People are dumping their shit. That's it. That's literally it. So if you got it right and you picked a short, you got lucky, because you know you're shorting against what the herd is doing. So if you were guessing that NVIDIA usually would have hooked right there, and then it just fought and lost the fight very quick, very unusual. So just stay out of today. Let the day do its thing. That's what I am. I took that loss. I'm gonna call it a day and kind of watch this one, right? This is very, very, very unusual. But, you know, the market, we have the ratio is less than half, so we are very bearish here. But it doesn't mean I wake up and try to short the market off of like the open. I try to short off of pivots only. Remember, my goal today was to short off in there. So we didn't get it. Now right here, there is a long setup from there. Definitely a long entry point from there. To the next resistance, which would be roughly here about 20 points up on S&P. There's going to be a little 20-point dead cat bounce here in a second, right up to about 70. And I don't think I'm going to take it, though. Nothing was telling you to short. No. Nothing is telling you to short. You can't. You're just, normally, if the market just loses liquidity, just do what I do and get out of the way and sit out. That's the best way to trade. You're going to have a week or two or whatever of bad weeks. But let me tell you, you guys watch me go on like a 22-day winning streak with the same strategy. There's going to be a week that's bad. There's going to be a day or two that's bad. Every other day it's going to be bad. So you just have to understand that when the market loses liquidity, you just get out of the way. Find liquidity and long it, but when it loses liquidity, you walk. So like today, I took the trade, and then I lost liquidity, and I just closed it out. We're done. So we are out. I was a pragmatic question. You're very strong in not trading irrational markets for the prop trading program. Isn't this an irrational market? Yeah, so prop trading isn't trading. I've answered this question many times. A great question, Jerry. Prop trading isn't trading. It's a fucking carnival game that looks like trading. It's a game, and the game is played differently than trading. In a real account, yeah, I'm not going to go out there and risk my real capital in a market like this. I'm not trading my real account at all. This one, roughly like 3,000 per account. It's just the max. So right now I'm trying to get 5 to 10 profit. I'm going to lose 2 to 3 per account. So roughly about 3 per account. But that's normal, right? And I could lose 15 per account or 20 per account. But that's just kind of where we're going. So yeah, just make that clear, folks. Not trading prop. What does it matter? But my question is, what does it matter what I'm doing? If you aren't trading prop, then you're not going to be mirroring what I'm doing. Or you're not going to be mirroring what I'm doing anyways, right? Because you guys aren't copying what I'm doing. But in the prop world, you take the risk. There's very limited downside to taking the risk in the prop world. The goal is, in the prop world, is to beat the game. And the game, I trade more than I would in a real account, 100%. And my personal, I'm not trading my personal account at all. Not through any of this, no. These are rational signals. I just usually sit out. We teach you guys that. In the prop world, though, I am going to take the risk because you have a schedule. You have to win in so many days. But yeah, so today, right, we just busted through all the supports and markets kind of falling through. There's nothing for me to do. In my real account, I usually avoid bear markets altogether. Yeah. Have you guys taken the irrational trading class? When markets are irrational, I usually step out my trades from small to zero or medium to small. It's a good question. Yeah. So what I do is I take long stabs at the right place, and then I take short stabs where I need to take them. So today on the S&P, breaking MHP, now we flipped that one greater market signal to bearish. So there's really nothing holding on now but the monthly maps. The market is trying its hardest to survive, and it's losing that fight. Now, again, nobody can predict the amount of overwhelming selling. That's unfortunate when it comes to the market, but it happens, right? We're still taking the correct statistical bet. It's going to be a brutal month, but I'm going to tell you guys, y'all stick with me for the year. You're going to see some pretty solid performance over the course of time, but everyone has bad weeks or months. And again, nobody can predict the direction of the market pretty easily. You get it wrong some of the time. Take the risks, get out of the way, then don't play it. Don't do extra risk. So the props are different because on the props I'm taking additional risk because I say I'm going to do it. I'm trading, I'm trying to get an advanced. I'm trying a new trick with this Tradeify. I'm trying to get on an advanced schedule to where I can get 5 to 10K per day per account. I want to hit the consistency of 20%, but to get to 25,000 per account before I get the first payout. It's a game. So this prop trading is a carnival game. And normally I'm going to take additional risk and additional trades than I normally would. In my real account, I'm in no hurry to make money. That's the best part. In my real account, it doesn't matter. I'm zero hurry to make money. And so in that personal account, all I'm going to do is just wait until a great setup happens or a good market is there and get back to it. So my personal accounts, I can sit out weeks, months at a time. If I don't need to touch this. But the prop firm, especially on the stream, you guys are going to watch me do something. So I'm still going to take stabs at it. It's part of it. If I sat here, again, I've done this for many years. I used to sit here and be like, I'm going to sit out, guys. I'm going to sit out, guys. And the numbers dwindle. When you're not making a trade, people don't like it because 60% of people here come here and watch you trade because they want to copy your trades because they don't want to learn the game. And they're going to watch you. This is a lot of you here. You're going to watch somebody trade. You're going to copy what they do. You're not going to know what you're doing. And within 1 month, you're going to quit trading with no money left in your pocket. And this is the fate of a lot of you. And I encourage you to not do that. I encourage you to learn the game. But unfortunately, is what it is. When you're not making a trade, people move on to move to the next screaming loudmouth on YouTube that's doing something so they can copy it. This is what a lot of you guys do. I'd be very careful touching it here. This could be a really nasty bear trap. This is highly unusual. Reclaiming the DD band could be good for a reversal for the day. But man, that opening move was just brutal. This is what it is. If I don't back in the day before the prop firm thing, prop firms for me are a low risk way to trade and keep the YouTube growing. It's a math choice. I don't do anything that doesn't make me the most money per minute. Remember, I'm a math genius, guys. Everything I do makes me the most money per minute in my life. So, trading my real account in a smart way, viewers stop caring about that when props are a big thing. It was funny if I make 50K in my real account live on stream, and compared to somebody that make 250K times 20 or 25K times 2,500 times 20, same amount. The times 20 accounts was like the show people liked. People like the whole prop thing because it's what they're doing. And when you trade a real account perfectly, nobody cares. You really don't. It's a sign of the times. So, sign of the times that people want to see props, so I got to do what people want to do. Yeah, it's so right here, this is 5947 is a reject. Like some days are going to be like this, and you just got to kind of like, deal. But, don't blow up, don't take risk. Further, if things are weird and irrational, like down here outside of here, we also have new rules, Jerry, by the way. I don't know if you've done the new classes, but we do have new rules that open up the door for a lot more trades as well. So let me see if I can find a bottom here if there is one that exists. But like I said, like look, nobody can predict that. That's just nonsense. But you have to make sure you just survive it, which is what we did. Move these lines here. Clean this up a little bit. So, yeah. Nvidia is this market. It looked clean. I thought it was going to at least have the retrace before it went down, but either case. 2842 is a support level today. So this one is right here. Support level. Or the lower DD band on ES is also a possible support level as well. We are here. Now the rule with this DD band is if the DD ratio is less than 0, I think it's a let me give you the cheat sheet here. There is a Nvidia is the market today. Isn't that crazy? You have to see that. Let me go to the cheat sheet for you guys really quick and show you. So that's good. We'll probably just we'll hang on the stream with you guys, but that's good. Maybe I'll have like a we'll maybe play some Call of Duty or something after the stream, something chill. All right, let me go to cheat sheets. Like I said, not every day is a winning trade, but hey, you got to lose with grace. Part of trading well is losing. These prop firms, though, it's about beating the game. There's a whole thing that goes with that. Let me show you guys the new cheat sheet here. Remember, I always take stabs along at liquidity because there's always scalps to take. And while today wasn't the day that won the market, at the lower band, if the ratio is less than half, which it is, I can still take it with the medium trade. It's always worth taking on the reclaim. So the reclaim is as follows. I let it move and let it move a little bit and then let it come back and bounce. And then there's the trade. So it hasn't done this yet. I don't consider like just dancing around the pivot. Like essentially right now, if it breaks and finds higher highs off of that first wave and then it tests, then it's a long entry with a medium spot. So, but yeah, the rules are as follows. Like used to irrational markets when we teach you guys is that, I usually sit out of a lot of stuff or trade smaller, but since we did our back test, we found out that there's still some good pivots, even outside of the bands. So down in here, strong pivots, MHP, bear zone top, bull zone bottom, red line. So even here, this is a strong pivot. Small trades only, like one contract. If I'm doing 10, I'll do one. So outside of DD bands, there is no shorting at this point for me, but I do always long back to the band. And you can see there is a little bit of pressure there. It did undershoot. So this little small longs only hook to the band did take place for sure. Yeah. And so today was nothing. I didn't do anything wrong today other than the market just beat me. So the point is that when you find liquidity and long it and you lose a trade, it's because the market overwhelmed your liquidity. We know where the buyers are going to be, and we assume that most days the liquidity wins. And there are times that people are just liquidating for no reason, for whatever reason, and then it just plows to your liquidity. And that happens. It doesn't mean you do anything wrong. That's what they want a lot of people to notice. You can never say, well, you picked the wrong direction, because that's nonsense. Nobody can predict the direction of the market. You can take a guess. The market is random. The direction's random. But what you can do is predict where volume will be and then take a stab. We have odds that certain things happen, and then if the odds are good, but then the market plows through it anyways, people just randomly selling more than the liquidity can handle. Okay, so it is getting that break. This is why we don't short below DD, which is good. I'm going to kind of like Since I'm at my loss limit for the day, I'm going to call it and not probably take any more trades. I don't want to take any more drawdown. But this return to test is a possible long pivot from there. So what I do is I never chase on this one. Little red candle comes out and taps the bottom band, usually place. What an interesting day. Yeah, this is a very unusual move. I'm going to tell you guys, this was unusual for me too. This is not normally what happened. What normally would have happened, I was saying it was the same trade setup as yesterday, which I was excited to get this move. I was wanting this. But damn, it just pivoted. It pivoted before I got the good move, which I don't like. As part of it happens, it just happens. All right, so S&P is now greater market below MHP. This isn't the best sign for the bigger market. Monthly maps are still kind of giving us a little bit of hope for at least this week for a dead cat bounce, but I don't think we're getting it yet. But it would be the weirdest, craziest, nonsensical thing to see this happen and that happen, which I don't think we do get this, but we'll see, right? Resilience is now coming down lower. The index just crashed when res is very positive. So that's what actually held me into the trade. This was really like strong and long here, but index sold off much faster than the stocks, which tells you one thing. Glass, what does that tell you? The index sold much faster than the sum of all the market cap. What was the index? Why was the index doing that? Why was the index doing that? Just because of NVIDIA, one stock. The rest of the stocks were cool. So NVIDIA just dragged everything down. So that's kind of like the interesting thing, right? Yeah, liquidation to get ahead of something, but also just basically showing that while the rest of the market was sitting pretty, it didn't take, like, the stocks were just following, something that was a big part. And again, this does adjust for the market cap, but NVIDIA was like, it has its effect right at the start of the day. And while NVIDIA started pulling through its box right here, resilience was still going up. NVIDIA was going down while the rest of the stocks were actually holding their gap. This is the craziest thing that happened. Look at this. Look at this. Look at this bullshit right here. So anyways, just NVIDIA alone was selling off, and the rest of the stocks were doing okay. The rest of the stocks were holding the half gap. And once NVIDIA plunged into darkness, as you see, like, it doesn't have any effect on resilience down here because NVIDIA has nothing to do with it, but the other stocks started selling off at like 9 o'clock. So I don't even know. I'm just going to like randomly throw some stocks on here and see what it looks like. Little dead cat bounce on that. And so Meta started falling at the same time too, though. Was it all of tech? Yeah, it looks like all of tech did the same thing. Amazon. So I guess people were just like, yeah, and then you had other stocks like Apple were doing okay, right? Which is interesting. And I guess we had Apple. Here was the fight, right? Apple was doing well. And this is where it started tanking when Apple lost. So Apple's still a big part of it, right? So while NVIDIA was losing right out the door, Apple was actually fighting it. So remember, this is the battle of like 3 stocks. And it's the craziest. I was trying to see which stock was going up or what stocks were going up. But yet, Apple was kind of doing okay. And then once it crossed through half gap, resilience just plunged out. So you kind of have like this, the Magnificent Seven basically control the S&P. So while you did have enough market cap from Apple floating this gap to hold, like you do right now, it's crazy how this works. The sensitivity of the market is just being so, the range is just so big for such small moves in these stocks. But I guess enough market cap sold off that we just overshot on the index. But Apple is balancing the market up, which is so crazy. Watch this rally and I could have been right the whole day. So back on the trade though, if it goes back to the liquidity pocket, I'm back in on it. Like I love the idea to see it that way. And I'm like scaring myself out of doing it, but look at this. This nonsensical. But if you guys are, what are you trading? Are you guys long? Are you guys short? What are y'all doing? Are you long? Yes. It was the correct trade to take. We just couldn't plan for this overshooting. It sucks that it happens sometimes. Are you guys long? You guys long? You guys long? You guys long? Man, what a crazy day. Our pivots are still doing very well, but once I take a loss, I have a loss limit for the day that I like to take. So I don't like to do any more once I hit it. Part of the control that I have when I trade. And remember, as crazy as it sounds, you know, 90% of days, markets stay on the same side of monthly hedge pressure. 90% of days. So it wants to be above here, which is doing. But as you see, does everyone see how this just kind of like overshot and came back? If you were to erase that real crazy volatility lapse that we had, which also came from a UVXY hedge break, which also caused that illiquidity, it's a volatility thing that we saw. So once we started breaking through VIX hedge, and then VIX hit MHP and tucked right back down, you just had a volatility thing. The market just swept everybody really fast and came back to where it wanted to be. It's like this didn't happen, and it's back to where I was actually entering my second position for the trade. So as I took the gap and go on the res, like this was all good and strong. I was planning on longing, like basically just building all in here, being long for this kind of move right here, just at least support this. So that was like perfect setup, and you know, somehow the market just on lack of liquidity, like the volatility was spiking, and then from here we just ran super quick, and then the market held its bull structure. So those of you that are the bull trade, y'all are gonna be the big winners today. Maybe not me, but you guys will be killing it. I think it's back to normal. And just when I hit my loss, I'm gonna trade anymore today. How bad could be at March? It's gonna be worse in March. That's the thing. The monthly map shows it being worse in March than February. That's the one thing I don't like. There's no like solid liquidity going forward. Look at SPY. The space, like even next week, you see this, the space is the volatility. The bigger the space, it looks like a dog head. LOL. Here, huge. So like weekly ranges of S&P 601 to 587, like 140 points of travel is big. So you're gonna span 140 points next week probably as well. So about, you know, that goes down to about 580. So this market can see this like you can fill this gap at 582. This is coming next week. So that's the one crummy downside to this. Now I thought we were gonna get a green and then push our way lower, but looks like we're trying to push our way lower now. And this might actually be that green day, but this is just one of those weird things that the volatility is there and it's still scary. Tariff in effect is next week, yeah. Yep. It's part of life. No, you know, loss limit for the trade actually works. Yep, that's how it works. That's how life goes sometimes. But you can't sweat it. I'm like, oh man, I was right. You know, I did this right. I did this the right way. But again, this is what happens. I did all the right moves and the market just beat me. And that's okay because over time, I do the right moves 90% of the time. And my trades win 85% of the time. 85%. You guys see that. So here, in this perk state we're in right here, the liquidity pocket, this is EST trade. Take that every single time. If it breaks through, fills the gap, and comes here and supports, there's a normal or a medium-sized long that I can take from here to upper DD band if it does go. So as unfortunate as this was, that happens. What an unlucky run. But these are setups here. The only other short setup that does appear is if you lose MHP res. There's MHP. So if this falls through here again, it comes on this one from the bottom, like it's this guy right here, then it's another short setup to lower DD band. So that's really the only place to short from. I don't short from liquidity. So I don't short when markets are liquid. But losing MHP is another ride down the DD right here. But yeah, in my real accounts, I don't really take abnormal amounts of risk when markets are like this. I mean, the whole point of a real account is to preserve and save your money. We've been talking about a bear market for the last 4 days. You know, bear market's coming and it's here. The market's not showing signs of liquidity and everything's just kind of looking crummy. So for me, it's like preservation is okay. I'm in no hurry to make something. But with these trader funding programs, you know, it's a race. And you guys want to watch me do something, so I'm going to commit to doing something. If I sit here, and this is the science of it, right? If I sit here on my real account and just be like, I'm not going to do anything on my real account, you guys will get bored and people will like usually stumble out. But if you're trading the trader funding programs in this environment, I mean, the risk is practically nothing. Like, I'm not losing anything. But even though I blow up the account, I lost $500 over a 2-week period. I mean, it's like, it's not, the trader funding program is mostly for the views and not as much the money. Like, I see it as like beating the game is more important to have people see me beat the game than it is to actually make anything from it. Like, I returned my investment the first round of Tradeify, which is nice. But yeah, look, there's a liquidity pocket. The trade I took is now the winning trade. Boy, I hate that happens. Well, hopefully you guys are doing well. Ain't that some shit? I got cheated today. Every single time song. Do we have an every single time song? All right. Who longed today? Everyone made more money than me. Up 25 in your cash account. Dustin. Damn, boy. Did y'all make, y'all, everybody win? Y'all won, y'all won, y'all won, y'all won. Man, I'm so jealous of you guys. You also shorted me a lot. There you go. EST, EST, EST. I know. What a ridiculous move. It's not the ridiculous move. It's the expected move, right? The downside was a ridiculous move. That volatility explosion was a ridiculous move. But yeah, this was what the market was supposed to do. This is what we talked about all morning. Market, this dang son of a bitch of a market. Well, how about that, right? 2K per account. So this is why, you know, when people say, did you short? I forgot my door was open. I didn't even notice that. I was like, it feels surprisingly cool in here. I wonder what that is. Oh, you guys didn't even let me know the door was open. You can't even see the rocket scooter. Okay, so hold on. And this is covering my face. All right, that's better. Yeah, so if I were longing this and I was in that long, I would completely be flat right now. That's a great move for the long side. Yeah. What a crappy morning. Now I think we run to 60.35. Now I wouldn't try to guess anything from here at all. Yeah, maybe run up to upper DD band, but like from here, VIX is still above hedge pressure. So we still have a volatility thing going on. It's going to chop around a lot. It's not going to be a straight move. You guys don't understand that one on the VIX. So VIX is kind of like, this is what caused it today. VIX broke hedge. We're still irrational volatility. We're going to have some big red candles in the next 5 minutes or 10 minutes. Oh, there we go. There we go. And there it is. So still got volatility. And this exhaustion candle is why we say EST liquidity. I find liquidity and I long it because that's what happens. Now, these are good setups. Now, I just got squeezed out. But in hindsight, you can see that the liquidity pocket is bay. Liquidity pocket's bay. We love them. Hedge pressure, monthly hedge pressure is Bay. We love it. But this was just a little unusual. Now, we saw that right here, the big volume spike is DD band. We always predict volume in DD band, which is great. Love it. Fortunately, sometimes in bear markets, the markets play a little bit whipsaw, and you're not going to get as clean of a market as you want. That volatility kind of invades your day. If you were to delete the volatile part, that really didn't matter. You just went and came back. The market's doing exactly what you'd expect it to do, right? Is that the market opens and then it tries to fill the gap, and then it finds liquidity and sort of hangs in there and is trying to do whatever it wants to do, right? And it just overreacted, and now it comes back to find liquidity. It's common to see that happen in bear markets. The overshoot is unfortunate, but hey, I stopped out here. I could have been upside down all the way to there. I did the right thing by stopping when I did. So this one is an example, liquidity from here to here. This move, whenever I draw these lines like this, what it means is you look for it to break through and test. So there hasn't been a breakthrough and test yet. Usually the first candle that's oscillating around it doesn't count as the test. So if this guy, for whatever reason, comes through and then tests and builds some support here, then it's a long. So I'm not too eager to jump in on bull side pushes until I get a test, so or bull side breaks. Now we did open above this bull side, and we usually close above the bull side 90% of the time. When the DD ratio is less than half, that's about 60% of the time. So with that being a little bit lower, that explained why I was in a position of like 3. I think I did 4 actually right on the edge. But that's roughly like less than half. My normal position now is going to be 10. I'm super confident I'm going to hit it with 10. That's my new game here. Cautious taking that trade again. I wouldn't do anything again. If I got the long from bottom to top and I put 40, 50 points of S&P in my pocket, remember, I aim for like 10 to 20 points a day. If somehow you put 40, 50 points in your pocket and you're still trading, I need to come over to your house and take your keys from you so that you do not drive your car. If you got lucky to make either one of these trades today, you're golden. If I make 30 or 40 points in the S&P one time, I never go, ooh, what else can I get? That's an amazing day. If I get 10 points, I'm usually done. 20 points, I'm really done. Like, oh, I made 2 good trades with 10 points a pop. I made 80 points in NASDAQ, I'm happy. If you make 300 points in NASDAQ, you're lucky. If you're lucky and you get that big run, don't press your luck. It's not investment advice, but like I said, there's nothing worse than having an amazing day that turns into a bad day because you're trying to squeeze out a little more. I was going to long a DD as well, but I don't have the ability to do so. I didn't want to bust the accounts. So I'm really, or hit the loss, like I'm really close to the loss limit. So I couldn't afford any more volatility. I was like, I'm going to be right, but I'm also going to lose like another, 500 or $1,000 just to be right. And then it'll probably bust me. So because I knew that, I couldn't take the long here. Anyways, even if I wanted to. And I couldn't take the long here either. The volatility is too high that it challenges too much drawdown. And it's just the state of these funded programs are all like that. You have to do it. You long to the recovery of the DD master. Let's go, baby. Take the trade and reset your phone to factory settings type of day. Yeah. Turn off your phone. Take it easy. Yeah. Possible push up. Well, we're in the liquid market and resilience is back to being positive, which looks great. But man, this is just like nonsensical. And you guys can see right at the end of the day, it's, the setups are working, the system is great, it's alerting the correct things, but for some reason just a random flush came out, and that was really cued by the VIX hedge break. That was kind of part of it. So just rapid awesome volatility. Man, I'm so tired. I didn't even go to sleep until like 3 o'clock in the morning last night. I could not sleep for some reason. Do I adjust the 42 10-point rules and higher volatility? I don't adjust because of the volatility. I usually keep it the same. I adjust my position size because of the volatility. I'll trade smaller around a bigger spot. So like today, with all my confidence I had, my normal trade was 10. My medium trade was 5. So I put in a I was building up to 4. Like I started off with 2. I added one more and added one more. Like I was trying to not build too heavy. And I built heavier at the start, which I don't like that I did. But I was a little overconfident today. So I did like 2 and then 1 and then 1. I was trying to have 5 right in here if I could. And because of the volatility, I spread my bet out. Let me put a color that's not so crummy to see. So if I want to do 5 in a strong bull market, I'm just basically like, on this particular day, I would put 2 and then 3 right here. I would take it and go. In a more volatile market, I know that I'm going to have some overshoots around some of these strong pivots, and they're all kind of lining up at the same spot. I got this one and this one and this one. They're all right here. So instead, I was spreading it out. And then I was going to put another one here. I know it sounds kind of interesting because they're all, I was looking for this, which it did. The problem is that I I was just right at the edge of stopping out and drawing down and hitting the limits. So I couldn't play anymore. That sucks. So what I do is I spread my bet around wider. So I'll still have a similar stop, but there's no way to know how much you adjust your stop because of volatility. Like 594, my stop would be at 593. So I'd hit it and I'd stop and it would go and then it'd come back. I would long again and then I'd stop again at the same spot. So this would be a failure. This would be a win. This one was actually a win, the EST trade here. This one was a loss. This one was a win. This one is still on fence. So, you know, it's like the setups are still working really well, but unfortunately I just took too much loss to be able to still play for the day. You love going at 1500 pre-market and blow the account by 10 a.m. That's part of it. Yep. That's hilarious. It is part of the game. You just got to smile and shrug it off and move on to the next day, you know. Fortunately, it happens. Boys and girls, can't win them all, but you know what's crazy is that when the market is bearish or having these volatile tendencies like this, we know what's coming. It's really bad. We talked about it every day in our Zoom calls. We've been talking about this bear market for like the last 5 days. It felt different as we were selling off. I took some licks a week ago. And just this market is just crazy. Now it's really hard to plan a short when the market opens bullish. Does everybody see this though? The market opened bullish and was bullish for the day, and then it just liquidated. So what it's telling you is that's telling you something you need to pay attention to. It's not that the market opens bearish and structure's yanking us down. There are still enough buyers in this dip that there are people still longing and positioning for the long haul, even in this dip. Your asset managers scoop up dips all the time. But in the immediate term, after they get in and buy their stuff at the open, in the medium term, there's not a lot of long activity here. So while the market is structured bullish and still sells off, it's telling you the power of how much is being liquidated. That's all you need to tell yourself. Why switching my system and going for more and risking more? Ryan, I'm not switching my system for like how I trade in general. This is for trader funding programs. Each challenge, if you may, is a different system. If that makes sense. Each one of these is a carnival game with different rules. So right now I'm experimenting with a new rule set to try to actually game the Tradeify rules a little bit. The goal is to beat their game. And in a real trading account, I would be doing something different. That makes sense. Matthew, it says at Matthew Goose. Goose, like the trader? Goose? I don't understand. Cheater. Hey, Goose. Is that you, Goose? He called you a goose? He's probably asking if you are Goose. There's a guy named Goose that trades. I think he called you a goose. No. Wait, hold on. Let me follow the saga of what you guys are saying. Oh. Okay. Oh, I get it. That was you asking. Okay, hold on. Let me start over. Cheater, you are a goose. Oh. What? I don't think he's a goose, man. I think he's more like a maverick. Yeah, I'm gonna steal your jokes too. 1 Portugoose, 2 Portuguese. This is next level avian mockery. Or you guys are so funny. What is that even an insult? You, my friend, are a squirrel. Aw, so I'm cute and fun and people love me. Matthew, calm yourself, sir. Be kind. Be kind, bro. Be kind, rewind. Take it back. The mods are gonna lock you up in the hen house with the rest of the birds for like 5 minutes. They don't like the meanness. I'll play nice. Look at this. This market, it makes me want to cry. I'm sad. The trade setup is like looking super well today, but hey, if you guys ever wondered, I bet you all sit here and think about this every single day. You're like, I wonder what's behind that door in Matt's office. You know? And when it's like reveal what's behind the door, like the curtain, you know what's behind the door? Another door. So, you know, that's kind of what's happening. Let's take a shot of Grey Goose. Grey Goose ain't bad. One of my vodkas of choice. It's the bathroom. I think it's a closet. As a matter of fact, I know it's a closet. That's correct. It is a closet. Do I jump back into the sessions? Yes. Justin, if I could still trade, I'd still be trading. I'd still be longing the shit out of this today. I don't have any more room to play. So it sucks. It's a closet of lies or snacks. I think it's a closet of stored computer components. Let's go have a look, shall we? Let's go see what's in the closet. Hold on, before it's got improper things. It's full of keyboards, LED lights, cables, a box for toaster, all kind of stuff. No skeletons in that closet, just my old streaming shit. I used to have the LED lights and everything. That's all in that closet there. It was actually there so I can set it up. But then after I put up the Rock Scooter sign, I was actually loving what I had in here. And I was like, you know what? I love what I have. I'm not going to decorate it up with like LED lights like I did in the last room. Bourbon's better? Yeah, bourbon's better. There's no crying and trading. Yeah. Behind that door is a glory hole. You know, behind that closet door is, you know, IDOC's office. So I could drill a hole in the wall. Can the cost of busted prop be tax deductible? I have a feeling, this is my first year doing prop firms. I have a feeling that every part of a prop firm is tax deductible. Everything. Every piece of everything, every cost, every data feed, every profit share. I think and again, I'm not an accountant, but I would presume that everything that they claim that you lose, that's documented that you were taken from, is deductible. The cost of doing business, as you are getting paid 1099 wages for this, I presume the entirety of it is right. You can write it off. So if you go in there and you make $100,000 and you spent $30,000 to get that $100,000, it's just like running a business. These are your cogs. This is the cost of operating your business. It's all a business expense. It should all be able to be written off as business expense. Can you claim the account amount? Yeah. Oh, the account amount, like $100,000 account. I think in taxes you can. Like all it is your, it's your income as a bottom line. How much money did they give you? How much did you spend towards the business? And so your 1099, you're a sole proprietor or a single member LLC. The taxes code's the same for both of those entities. So you would be able to like write off I'm assuming you can write off any part of a prop firm as a business expense. Now you guys have been doing this for years. Y'all tell me if I'm wrong, but I can't understand why you wouldn't be able to. If the loophole is that you're getting paid wages to do this fake trading, then this is a job. You're getting paid a salary or a wage to do a job. Every expense that goes into this job, including the electricity to run your computer to do this job, is now deductible. Your cell phone plan, your internet, everything is a cost of business to do this job. If you're out there at the prop firm, you should be writing everything off. Everything is a work expense. You're a sole proprietor, a 1099 contractor. Totally. That's how I'd explain it to my CPA. No, I mean, you're just a consultant. I mean, that's technically what the loophole is. You are a consultant working for a prop firm doing market research for them, and your trading is their market research, and they pay you a 1099 wage to do research. Isn't that crazy? It's equal to the amount of money you make fake trading. It's a loophole that claims to the industry. You've got that loophole back at you if you ever get audited. It's no, I am working for a prop firm doing market research. In the eyes of the IRS, they don't see this as trading because it's not capital gains. Nobody will see this as trading. The bottom line on your taxes will be income. And then you can prove, yeah, there's a cost of income. They say, well, what was the cost? You're like, well, I had to pay, $40,000 as business expense to do this job. And here are the receipts of that. Here's the transactions. You paid a company called Tradeify. It's a business expense required to do your job. If that got audited, they'd say, oh, yeah, Tradeify paid you and you had to pay them to do the work and yada, yada. And I think Jay Mooney is our resident accountant here. Let's see. Was that you that was talking about it yesterday? Who's my resident accountant here? I forgot. Home office is a write-off. I think you need to write off everything. This is a business. You're not really trading to the IRS if you're not live. Every prop account is valid expense. Yeah, that's what it seems like it would be that way. You place your trades on your phone, guys. So then your phone's now a business expense. I mean, you buy Rocket Scooter and educational materials to do this job. That's also a business expense. You guys can write off your lifetime purchase. So go buy Lifetime and write it off. This is continuing cost of continuing education for your business. This is like going to a work conference and paying to fly out and watch, continue your education. Everything you buy from us is a work expense. Your data feeds are now a work expense. If you're getting paid $10.99 wage to do trading, quote unquote, everything that touches or smells like or feels like that trading is an expense. Every part of it, yeah. Are your sports betting losses business expenses? Sure, why not? Well, I can't promise that they'll buy it, but I'll buy it. Yeah, YouTube Premium subscription for education. Yeah, like every single thing you do. You need to buy a new TV so that you can watch CNBC to do more market research. That 85-cent, Quantum Dot OLED. An 85-inch TV, 95-inch TV. So you can stream Top Step TV in your office. Yeah, DoorDash is business lunch. Well, I mean, I think most these days, I think like during COVID, Biden created that thing that any restaurant or food purchase was a business expense, even if you didn't own a business. I think that was something they made in COVID to incentivize people to still, order food and support some industries while at home at COVID. As everybody was forced to like, you know, eat out and stuff as much as they could, or get DoorDash or takeouts or whatever. I think it was like that. You can 100% of your food expenses could be written off if you go out to eat at a restaurant as a business expense. I don't know if that's still a thing, but I remember it was a thing. Ooh, ooh. If sports bettings are taxable, then your loss deductible must have proof. Can I check my DMs? Yeah, I got it. You don't understand this elite funding rule with profit trigger? You've blown your account for making too much profit? A lot of these consistency rules, you have to be very careful. They're all doing something to throttle you from trading too big too quick. The consistency rules is like the hardest part, man. Yeah, let me look it up for you, man. I got you. Hold up. What a stupid trading day today. I know. Today was tough. Was it tough for you guys? Don't even worry. Don't even sweat it. Shit happens. If you had a good day, then I'm happy you guys had a good day. Better day than I did. Let me look it up really quick. See, this is the new rules they have, I think. No, these are the old rules. Which one? ETF? Let's see. What do you got? Green all day, very bad day. Yeah, today was a really bad day. And this is what these nasty bear markets are like. Thank God we love these bull markets when they don't do this kind of stuff. But which one were you looking at? This was the profit trigger. This is going to be the eval. Maybe look at the one steps really quick. Which rule is it? I can't see it on here. Today is blue. I know. Yo, Shannon, what's up, man? Which rule was it? Profit trigger. Am I in the right spot? I'm on the one step. Which account type is it? That's my first question. Are you in a static or a one step or a fast track? Static. Oh, okay. Hold up. Is it eval or the elite account? Or the elite account? So what is daily profit trigger? I don't know. Is that on here? I don't see the word trigger on here. For real? Eval. Okay, eval. Okay. Let's see. I don't see the word trigger on here. Is this a new thing? Do you mind dropping me a link, dude, so I can see where it is? I don't see it on here. There is no DCA rule? They kind of go back and forth about their DCA rules. I remember the other day he was like, it's not accepted. So I'm not really clear on what their DCA rules are anymore. But if he says it's not DCA, just take a screenshot of that. Was there pivot below the DD on Nasdaq? Yeah, you had SPY had MHP there, and then Nasdaq had I don't think Nasdaq had anything, but SPY did. Nasdaq had 28, 842 impact line that it could have touched. That's it. Yo, Shannon, man, I can't find it. What is it? Oh, so he said the DCA was not allowed. Yeah, I feel like that they say that the DCA is not allowed every time we ask him. Profit trigger. So Shannon, what happened? What is daily profit trigger? So like what actually happened? With profit trigger, I've blown your account for making too much profit. It's definitely a consistency rule thing. But normally, if most of these firms, if you make too much, what they do is they just make you trade longer instead of busting you. No DCA. They had a big discussion in Discord about it. Oh, okay. Each NQ candle is like 40 points. Yeah, it's just nonsense. We have a hedge pressure break on VIX, so the volatility is a little crazy. It's in P&L and on Discord. Picture. Oh, okay. Can you send it to me, bud? Can you send it in like our Discord? Drop it for me if you don't mind sending. Can you send it to me so I can read it or look at it? Is it in their Discord? This is all I can find from their rules. It's in P&L. Oh, in our Discord in P&L. I got you. Okay, let me go check. Wait. Oh, well, I don't see it there. You guys are gonna have to send me the link. A picture. We're at in the P&L channel. How far do you want me to scroll for this? You guys got to give me better. I'm just like, give me like a little better direction on where to go look. I'll go find it for you guys. I don't know. I've never heard of this. The last message. But right, so I want to see something that somebody's saying profit trigger. Oh, daily profit trigger. I got it. Okay. And this is with ETF. Oh, I see it. Okay. I don't think you busted your account. I think that looks like a Tradeify thing where you can actually go in there and just program. I think this might be a Tradeify update where you can actually just program Tradeify. Are you sure it's like not an ETF thing, and rather it's just like a Tradeify feature that you can actually program yourself to limit yourself to maintain consistency? I think that's what that is. So an example is with some of these, I don't know who you're trading with. That's probably what it is, man. Yeah, that's weird that like an update came out and they set it for you. So it's probably a trade. Yeah, it looks like a Tradeify trigger. So basically you can pilot your own account in a way such that you can control your own gains so that you don't bust consistency. But I don't think it blew you up. I think it probably just closed your position. But that's weird that it was set a certain way. But yeah, I would turn all of that stuff off unless you want to use it and you're paying attention to using the levels that you set or whatever. Yeah, good question. But yeah, so that's cool. I thought you were saying it was like maybe it was an ETF thing. I don't think the prop firm rule has that though. Yeah, good call. Domain indicators work with Tradeify. I wish I could put my stuff in other people's platforms, but they just don't work that way. Tradeify isn't a Tradeify is a Ninja Tradeify is a company that don't care about third-party folks at this time. So, crummy day. Also hang out with you guys while we chill. I'm gonna say that today though is one of those days where it's unfortunate that I get squeezed, but you know the trade I wanted to do is still good. Does everybody see? This is my every single time trade. That's good. Every single time trade. That's good. I always want to do this, but sometimes volatility happens to squeeze you out before the trade even takes off. So from here, I wouldn't be doing anything else. As I said, if I was lucky enough to grab that long setup, I would be doing absolutely nothing else for the day. So unfortunately, market just collapsed. Happens. Take your licks, keep going. It doesn't fall forever. There'll be a day when we just crawl it all back. Tradeify needs some love. It's not a great platform. It's not. It's a perfect platform for what you want it for, which is absolutely nothing. It's great because it sucks. That's what I tell people. Tradeify's mobile app is great because it sucks. And I tell you what that means. And that their desktop platform is great because it sucks. It sucks. There's not a lot you can do with it, but that's what makes it great. Because you don't want to do a lot with this. You just want to use it to fill in your orders, and that's it. You don't need all the bells and whistles, and you know, like in a trading platform. The bells and whistles I use is with Rocket Scooter. I don't need a bunch of features in Tradeify. The features what make Thinkorswim a horrible platform. All this extra features and weight that the platform carries is like really heavy on your machine. Tradeify is a very light used browser-based platform. I can have 40 DOMs open and I can still play Call of Duty with full frames. It doesn't have any like huge resource hog. But Ninja Trader is absolute garbage. Like, it's horrible in every aspect. There's really nothing good about Ninja Trader other than you can code your own indicators with C#. That's it. That platform needs to die. But they need to put a lot of work. If you guys want more features in the Tradeify, it's so simple. It's my favorite. That's why I like it. It's so bad, it's good. But I like light trading platforms because I don't need all the jazz that comes with it. I need a DOM. The app is great. The Pulse app is fantastic. I love it. The desktop, well, I call it Pulse. I don't know if they still call it Pulse, but that was the old name for it. And their phone app was great. It was a chart with the DOM. You could see the levels, the volume distribution all in one spot. You could put your orders on the chart. One button push. I mean, it was really nice. Really clean and really simple interface. I did like it. But it's so bare bones. That's what makes it perfect. For me, I just want a thing to throw orders in and not have it really take up a lot of space on my computer as far as resources go. I made good money yesterday. Yeah. I'm trying something new with these Tradeifys. I'm on a new path. My job is to get 150,000 built up as fast as possible, despite consistency. Because I have to get the payouts, but if I get 5,000 and 10,000 a day, it shouldn't take me hard to do it. So I'm going to do some risk. I'm going to risk like 2,000 and bust and 2,000 bust and 2,000 bust. But I'm going to try to get all the way to the end and get that $75,000 buffer so I can get the live account. My goal is not to get payouts in this particular sense. My goal is to go to payout, but not have to babysit it for 3 or 4 months to get there. It's to get really far ahead and then move that account to the side and then start working on the take profit and the top step and whatever live on the stream. And then I'll just babysit the accounts to run up the trading days to get the payout. So my new goal is to do that. Try to get live. You out, Stu? All right, man. See you later. So for the rest of the day, we are irrational. Market has moved below DD bands. There's only long only setups down here, but there is no long pivot for a while. Nasdaq's kind of like, I think it was that one that we talked about. 842 is the only long pivot that I do possibly see, and then 635. So I'll draw that really quick. I was so excited to see this market move today. Man, these bear markets are just not fun to trade. DD ratio at 0.35, just not that good. And the monthly map is just looking so much better though. For whatever it's worth, guys. The monthly map, at least for now, is better. It's still not good. It's still, not terrible. But we are sort of consolidating with a couple of days of possible liquidity. But the range is just really high. And now we have forecasting volatility over the next 2 weeks. And then bull side is liquidating through April. This could be like 3 months of bear market. Not the best. So I'm still worried about the overall market. Like this and this, it's bad. And then the bear side is just like moving like this. This is absolute illiquidity and volatility. Problem is we may have like 1 to 3 months of this. That's not good. Which sucks because we had our peak viewership way back in here. People love these nice bull markets. And the markets turn to shit, and then people are scared of the market again. Like as soon as the market gets good, traders love the market, and the market's bad, traders stop trading. So some of you might have just found us right here, which is just crazy. Red. But the rest of the year was fairly fantastic trading. I did so many awesome things this year. I won a trading contest in October. I got my first payout the first time I did Tradeify. Got a payout from ETF. I was just having a great time. But these bear markets, trust me, if they're tough for you, they're tough for me, they're tough for everyone. Not much you could do because the market opens bullish and then surprises you with the bear move. That's rare that happens, but we're in the kind of like mode of trading in that rare territory. So as I tell people, don't be discouraged. Nobody's indicator can predict this is where it falls from. You can't predict the bear market. You can't predict a bear pivot that easily from a bull setup. Market just dumped for whatever reason. That's the time people decided to push buttons to sell, and that just happened. I had a bear pivot at the upper green band. I just didn't get it. So, but what I do know is that I did take my lick and get out of the way, and I'm avoiding all the rest of this, and that's pretty much what you got to do. Come back tomorrow, same bat time, same bat channel. We'll see what the Caped Crusader is going to do tomorrow. But in this particular case, breaking MHP with DD less than half is 2 of the 3 greater market signals being bearish. And with the monthly maps kind of being on the edge, tomorrow we might wake up into a full-fledged bear market. I'd be very, 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 very cautious going to this month. Ron, yes, they take the trader agreement. You have to make 80K in payouts for automatically move to live. So here's what I'm going to do. I can make the first 9,000 easy by putting 25,000 in the account at 5,000 a chunk per win. It's 25,000 per account times 5 is 125. I'm almost there. So if I make 25 to 30 per account in the first go in the first 10 days, I still make consistency on the first payout. And then I'm sitting there at 150-ish. And all I gotta do is make 4,500 per account at $1,000 per day for 5 days. Which means I have a ridiculous buffer I can set on the buffer forever. Ron, does that make sense? And I have to accumulate the payouts. But also, they can move you to live whenever they want. That's also the thing I'm taking in consideration. If you're sitting there with a massive balance, they can just decide to move you to live and give you 75K at their discretion. They just say at 80K, they give you the live account once you earn it. But I bet you if you're sitting there with $500,000, they might just grant you that much anyways, because then they can just give you a $75,000 trading account and don't have to pay you anything. Does that make sense? So they can move you early if the balance is big enough. That's what I want to see happens. I'm playing the game that way. Let's see if I can hit consistency and get the first payout window with a bigger amount, and then trade smaller the next 2 and 3 payout cycles. Yeah. Master Rich's crystal ball. Okay, I'll make it for you. The Ninja Trader browser platform is Tradeify now. After Ninja bought them, they just used their platform as the browser trading platform. Ninja Trader needs a massive overhaul. It is just an old dinosaur of a program. It could be a great program again, but it needs like a modern, it's like a 15+ year old platform. NinjaTrader 8 came out like well over a decade ago. Desktop trading platforms are like things of the 90s. They really need to make these like cloud-based, web-based platforms like they've been doing. Mobile-friendly. Yeah, the NinjaTrader platform is just... It's like Thinkorswim, man. They're just... And I say garbage. I'm not trying to be mean, but it's garbage because they make so much fucking money. They need to build a better platform. Instead, you get Thinkorswim is like almost, what, 25, 30 years old now. It's barely changed. They need to... Somebody needs to make like a better Thinkorswim. TradeStation... It's in the same boat. I mean, they're not, okay, let me start over. Garbage is a little mean. They're, what's the word I want to say? They're not bad, okay? They're the best that you have. Comparatively, they're all equally garbage for the most part because the newer platforms are really good. The Weebles, the Robinhoods, TopStep's platform is good. Those are the platforms that are starting to do very well. Like these, you know, web-based sort of things. I mean, that's a modern platform, low on your resources. You know, you're built for hyper-threading and things like that. Multi-threaded processors, multi-core processors. You know, utilizing modern system resources that we didn't have 20 years ago. Written in a more modern framework with a more modern code stack. These are the things you want to see in a modern platform. They're just old. I mean, it's not like they're bad. It's just like, you know, your TV from the 80s. You know, it had the little click-on thing, and it would fuzz for a little bit while the picture would come on. I mean, it was a great TV when you had it, but, I mean, it's garbage now. You can buy a much cheaper version of a TV that's 10 times better. So they just need, TradeStation, all these ones, they need to kind of like, they're not terrible. They're good for what they were designed to do. But modern platforms are just infinitely better and lighter on your computer and stuff, I think. TrendSpider is good. TrendSpider is really good. Just use your execution. Yeah, that's all I use Tradeify and Ninja for is like executing. I don't use any of the other stuff. And they're good for that, which I do like. I like Tradeify's platform for execution. I mean, that's what I use it for. He's got wraps aluminum oil, got bunny ears around his Sierra charts. Yeah. I mean, there's a lot of people entering the platform space because of that whole thing. You know, Matt built Tradester, which is like a better version of Sierra. You know, people are starting to kind of realize that, you know, there's a big gap. There's not a lot of companies coming through building really modern, useful platforms. You know, TradingView kind of changed the game for everybody. TradingView invented the mindset that you can do a lot in a browser. Well, TradingView is built on the right side of my screen. Tradeify is built in a browser. TradingView is built in a browser. Everything on my screen is all running in browsers. You know, TradingView really showed the power of what you can do in a browser with the trading platform. And so they kind of opened the door for people to take that route. And now TopStep has a browser-based platform. I have a browser-based platform. Tradeify has a browser-based platform. That's the future of software. You know, not executable, local executable files you have to download and install. Who downloads and installs programs anymore? This is like not 1998. And so imagine every time a new release comes out, you got to download an update, reconfigure your stuff. It's a nightmare. The cloud-based deployment is so much easier. You guys log into Rocket Security, it gets updates all the time. You didn't even know it. All you realize is you log in and you might see that you were logged out and you must log in again. That's how you know we updated, because we disable all your tokens and we log you out, and then you're forced to log back in, which forces you to connect to the server and accept the update. So, like, you know, there's so much better deployment with that kind of environment. And also with the browser stuff, you know, you know, especially with our things being all distributed from the network, you download the indicators from us. You don't even get them on your platform. They just download them from our server. Liquidity maps, resilience, all this stuff is live streamed to your browser. So even the Rocket Scooter platform alone is not doing any calculations for the most part. It's just like a viewing port for you to read the server. So the process I invented, which is what none of these other platforms have done, and we're in the process of getting it patented, is a server-based indicator architecture, such that everything you see on my screen is actually broadcast from another computer. The server does the calculation. The server gets the data. The server does the calcs, the multiple calcs, right? DD and then res and then liquidity map and all that stuff. Data comes in. Server does the calcs. Calcs go to database. And the platform asks the database, hey, give me that info. And the database goes, sure. So ours is designed to be ultralight. This is a technology I invented. So I have a lot of claims to fame in this world, not just trading, I guess. I invented a technology for trading platforms that I think is the future. There's security involved in this. Anything that I have is on a server. Good luck hacking in and discovering how hedge pressure works. It's on lock and key in a server. The browser doesn't have to do any calculation. Look how smooth I can. Look at this. I can do this, and it's like look how smooth it is. I don't care. But I go to Thinkorswim, and I literally change the time frame. Look, Thinkorswim dances for like 5 minutes. Let's look at a 1 minute chart. Let's give myself epileptic seizure. Well, I just want to check out what's going on. Let me see what's going on in the 1 minute candle. You know what I mean? And then I drag the mouse and I remove the mouse really quickly. How glitchy that is. I move my mouse here. It's like a fucking slideshow. Look at this. Look at this nonsense. This resource hogging dinosaur. This thing needs to be converted to gasoline really quick. Okay. Die and become fossil fuels already, dinosaur. Here, let's look at the daily candle. Like that, draw the candles and do it crazy, right? And anything you want to do, especially when your computer starts getting crazy, it just kind of locks up and is just silly. Look, here's the 1 minute chart. That's called the Thinkorswim dance. So with the browser-based thing, everything's cached nicely. It's loaded up in the browser memory nicely. It's handled very nicely. It's very light on your resources. I can open a bunch of tabs though, and of course, I can crash my RAM if I open up too many browser tabs because I have a million things open. But other than that, it's a pretty light platform, which I love. I love anything browser-based. That's why I do like the Tradeify. It's browser-based. Now, their calculations stuff are all local. But the cool thing about here is whenever you connect to Rocket Scooter, we open these web sockets right here that download the information. We stream the candles to you through this Brazil. We stream resilience through here through this Brazil scanner. We stream the scanner results. The scanner is not even doing local calculations. Well, it is. Sorry. It is. But the comparisons are done on the server. Are you above or below hedge pressure? And then we stream that information to you. The futures data, candle data, all this is streamed live. If I pull in QQQ, it asks the server, hey, what's QQQ? And the server goes, boom, here it is. Look how quick that was. There's no Thinkorswim dance. There's no calculating with the spinning wheel. It's super fast. I made a very fast platform, a very light on resources, fast platform. It's very nice. So our calculations are done server side, which means you're not limited by how slow your computer is. So that's my invention. The TOS Tango. So we just use TradingView's charts as a conduit to draw on because it's a really nice light chart. And I could have built the chart from scratch, but I didn't care to. My technology isn't charts. My technology is server-based calculations that need to get into the hands of traders. So we needed just a display for you guys, and we chose TradingView because TradingView is a beautiful, light operating charting platform. But TradingView by itself is also kind of hard and buggy when you have very complicated indicators because PineScript is running in the browser to do the calculations. So how we rocket scootered TradingView, which is to take their scooter and put a rocket on it, is we took out that process and all of our indicators are calculated on a server. The server is running the load and you don't have any problems. I mean, you can switch through tickers so quick. Apple, 1 second. JP Morgan, 1 second. Amazon, 1 second. Look at the auto scaling. Put it right in front of your face. Oh, that's so pretty. GameStop. 1 second. All the information you want right in front of your face. Look at even auto scales for you. Hedge pressure, monthly hedge pressure right there. AMD. 1 second. That's the best part. NinjaTrader sometimes has to like calculate all the lines going back in time. So if you guys don't know, and Pips is here. Nothing really new there. You personally done server-side handling calculations many times. Yeah, we've been doing this for a while. So the idea is to have the live streaming socket for every single piece of these. Every indicator is streamed, even the ticking indicators. Like a moving average will be live streamed. It's all streamed. Yeah. I remember your platform back in the day. It was really nice. So with this, all the information, the browser does zero platform side handling of any calculation. There are some localized things that are actually designed to decongest the server, but this process of the way the data is processed and handled, and we have this data proxy that comes through that part of the, well, I guess I won't say much about it, but part of the technology is how what we do with the data and how we roll it up when we get it to make it even faster. So like all the options data, we do a roll up procedure on that, which basically creates a faster handling of that options data. So it's lighter, it's faster liquidity maps. So we can have ways to even cut corners with doing the calculations from these indicators. But what you guys see on here, every single thing that you see, like if you want to run the scanner, 100% of this stuff right here, let me just scan real quick. So in this particular sense, every single thing that you see, all of this, all the lines, all the numbers, all the alerts, all of this, even the picture that's sent is all sent from a server. And the way that we cache things in your browser to speed up the process is part of the invention. So to be able to switch back and forth through Spy, an example is you've already downloaded the information from Spy and it's locally stored in your browser, so you don't have to re-download it. It lightens the server. You pulled it up once, it's cached in your browser. So some things we can do to make it faster for your experience. But yeah. WebSockets and SSEs, yep. That's like you are also on like the forefront of creating something really cool that people weren't doing. And you started a little bit before we did doing stuff like that. And the idea is that is a modern way to go with a lot of these tools. TradingView has to throttle like how many outputs you can have when you come to a TradingView indicator, because the calculation is done in the browser. They want to limit your experience to being a good one. And so when you create an indicator on TradingView, they only let you do so much. You can only have so many outputs. You can't put like 6,000 outputs to the chart because it starts to slow down the TradingView experience. So even creators are limited on what they can produce, which the browser has limitations. It will start to lock up if it's doing too much. It's a complete CPU hog. Why not add execution to Rocket Scooter or White Label one? You can. You can trade here. This is my active AMP account. You didn't know you can trade on our platform? All you have to do is connect a CKG account and you can trade. Lot MQDD. Well, take a look. DD ratio is better than it was earlier. When's Rocket Scooter mobile? Probably not ever. I don't know if I want to make a mobile app. It comes down to the same problem of deployment of you make a mobile app, you got to make an Android app, and you got to make an iPhone app. It's just a lot of work, and it's a lot of work to create and maintain, and we need to have a reason to do so. I don't think a mobile app is going to be super great return on our investment if we build one. Obviously, it'd be a great path to take. It'd be a very expensive path to take, but it's risky if it's going to return something to us. Now, if we were like brokers and we were making our money with like trading accounts and getting commissions and all that, we'd be hand over fist giving people a mobile app. They would use our platform to trade. You guys using our platform as information only. So you can load the browser up in like Safari on your phone, and you can run Rocket Scooter straight from a web browser on your phone. And it works pretty okay for just getting the information you need. To go out and build a mobile app for like the slight convenience of people to utilize Rocket Scooter, you're still going to have a mobile app to look at it, but then you're going to thumb back to your mobile app to trade with. And so at that point, it kind of becomes moot anyways, unless you're trading through this. Now, if we were allowed to connect to like Tradeify's API, and you can do your prop firms, if you can log into your prop firm through Rocket Scooter and trade, which we're waiting for that moment for them to say, yes, you can, then I'd like to develop a mobile app so that you can trade and chart all in one place. Then it's worth it, right? But now it's not worth it. That makes sense. All right. Yo, later, Ryan. See you later. What is possible auto execution strategy solution? We can't give you guys auto execution through our exchange agreements. The CME group doesn't allow it. Believe it or not. Our current data structure, data contract is structured such that we can't provide live executions. You must push your button manually day to day. I know it is allowed that you can allow auto execution for futures, like Ninja does it. But there is a whole different layer that you have to go through that I haven't even explored how to do it, even if we were to do it. Our expectation is that we don't accept the liability for auto trading, that you have to manually push the button. Because it's more like, from a company sense, if you manually push the button, then you can't blame liability on us, like the platform messed something up for you, cost you money, kind of thing. But in reality, the exchange, when I got the data feeds set up, with CQG especially, CQG was like, you're not allowed to auto trade. You must sign agreements that says you're not auto trading. Okay. Execution, they asked you like 5 different times. Executions are manual, right? Okay. Manual meaning you move the mouse and click buy and move the mouse and click sell, right? Yes. Manual means stops are manual too. Yes. And limits are manual. It was like a whole list of, are you sure this is manual? Like there was no gray area to be had on what manual trading was. Isn't that crazy? So they were, I took that as because there's a million different questions of each part of what manual meant, that there was to be no gray area. Like you couldn't accidentally auto trade and be like, oh, I didn't even know. So unfortunately, it's off the table for me building an auto trading thing for you guys. But let me tell you something. It doesn't mean you can't build one for yourself. I mean, you can extract all the information from the browser, build a bot that clicks a button on your screen when you can scrape hedge pressure because it's in your browser right now. I can send all this information to some local bot on my machine, and I can write a local bot on the machine, if I were you, to take that information that then clicks right here on the screen. So you can easily do it yourself. We can't sell you something that does it though. I'd love to, at some point, automate this for myself. Be kind of cool. Is Arxia something with IB? One day, Nadia, we will. The current process this year of our development schedule has been like laid out such that what we're trying to work on before additional broker connections is to build features first. Our process here is to build something that you guys want as a majority need, or a majority need versus and then a majority want, and then like nice to haves. The majority need is that everybody needs like the backtesting module kind of thing. And interactive brokers would be something that a lot of people would use, but it's like mostly like a non-majority want. So it's like low on the priority scale. At some point, we're going to run out of stuff to build. And then the next step, we're going to just connect to every broker. That is definitely something we'll do when we have nothing else to make. We have a lot of stuff to make that everybody needs. So, but it's on the schedule. IB is one that's easy to build into. Not hard. But Broker connections is a zero ROI for us. We would invest money and months of time to build that, and we wouldn't make anything off of it, and very few people would use it. So it has to come at the correct priority. Like there'll be a time where we say, okay, guys, we're going to connect to a bunch of brokers at once, like we did before with CQG. And then when we do that, it'll be so much easier. You can do it with one step removed, then people are making it auto themselves. Like I said, as much as it sounds, I love that you're like me, you're like reverse engineering. As much as it sounds cool for me to even hint that it's possible and say, all right, you guys, all you gotta do is check this box and now you can auto trade. Trust me when I say the last thing I ever want to do is do anything that the exchange looks at me and goes, what are you doing? You don't want to mess with the regs. You don't want to mess with the exchanges. All they got to do is say, we don't like you. We're cutting you off. And then our business dies. We're literally contingent on our relationship with the exchanges to operate our business. So you better believe that when it comes to any sort of gray area, the last thing I want to do is say, yeah, but you said no auto trading and I didn't do it, but they did it. It's not me. They're going to say like, fuck you, man. So as much as I'd love to, reverse engineer a way into it, that's one realm that I'm not going to ever try to play the gray area on. If the exchanges say to don't do it, I can't even hint at doing it. If the regs say, don't give investment advice unless you're licensed, I can't say, well, I didn't necessarily tell them to buy. I just said, buy, buy, buy. Oh, I didn't say you buy. I just said buy. It's like, you know what I mean? The areas that you don't in my business, and I'd love to, bro. Trust me, I'd love to be able to be like, haha, guys, I beat your system, just like a prop firm, right? But the last thing you want to do is get a ban from the regs, or a slap from the regs, or a slap from the exchange. That would be irreparable harm. So, yeah, don't do it. So I'm telling you how you do it. You can easily rip the data yourself in the browser. Write a little macro that moves your mouse on the screen and clicks buy, and moves the mouse on the screen and clicks sell, or even a macro that interfaces with your open browsers if it can, to modify things in the browser. I'm sure you can hack into the browser in Tradeify's web app and figure out how to write automation in that browser, write an add-on to your own browser. There's probably some GitHubs out there that does this, that you can write your own program that automates your own trading. And I can't stop you. You're outside of our purview and well within the limits of what you're allowed to do with the exchange data you bought. But I'm not allowed to provide auto trading solutions with the level that we have with our arrangement with them. I know it's possible. I don't know how to even go that route. I could explore it if we get to that stage and see what is possible. It's likely that the data feed costs 1 million times more. It's likely that I have to make you guys to go through a bunch of extra hurdles. It's likely I have to go out there and get a Series 3 license. There's probably a lot of hurdles to get to that. But I know it's possible because NinjaTrader does it. But I know that with us, the level we signed up for, they were like, don't do it. They're really strict. Yeah. So this is the exchange. It's not a regulatory fine. But when it comes to auto trading, I think it could be a regulatory problem because auto trading would suggest investment advice. So in that particular realm, I'd have to be licensed and we'd have to be registered with NFA and all that stuff when it comes to futures. That I do know. Short on DD would have paid? Probably so. Bitcoin back to plummeting? Oh, no way. Bitcoin. Are you kidding? Crazy, awesome, stable investment with a ton of utility everybody uses. Plummeting? No. Really? But it's so stable, guys. What do you mean? Look, I always say, I know I meme on the Bitcoin crowd a little hard, but I don't like when they tell me I'm missing out on something because it's like it went up hundreds of percent against the S&P. But when the S&P, I tweeted yesterday, but when the S&P falls 3% and Bitcoin falls 30%, there no way does that hint at stable. That by itself is dangerous. Like the asset is not like, it's not stable. People say, yeah, bro, but you can hold through, it'll bounce back up. It's like, that's how I trade. I don't want to lose 30% of my investment in one bite on a bad week. The reason I love the S&P and NASDAQ, because I lose like 1 or 2% on a bad day, sometimes 3. It's just so volatile. It's not extremely liquid, and the market just moves so rapidly. And there's not a lot of utility to back it up, so there's like no reason for it to hold its value. You know, Bitcoin and all the other crypto is a speculative investment that is valued strictly on the belief it has value. There's no utility for it. Gold you can hold in your hand, and the belief is people will accept it and always have and always will. Bitcoin is like an invisible thing that doesn't do much. So it's hard to stave off market crashes because there's no tangibility to it. All people have to do is unplug every computer that ever existed, and then there's no such thing as Bitcoin. It vanishes overnight. It's a digital, invisible thing that not even everybody uses. So it's easy to believe that, yes, on the way up, it moves up 100% when the S&P moves up 10. But on the way down, it moves down 30 when S&P goes down 3. So it's like, you know, it's a little hard on the wallet to invest in Bitcoin at this time for me. That's why I don't do it. TickTickTrader has direct accounts. What's the consensus on the firm? Never used them. I'll have to check them out, though. High beta, but 100% moves comes with 50% risk. Yeah, and that's exactly what it is. And if you're okay with that appetite, by all means, invest small, you know, like, but I know people that are like full porting their entire life into crypto. And man, that's got to be like you must be trading with like a bottle of fucking Tums on your desk. That heartburn sounds really bad. The problem with prop firms is that losing 2% in a day on your account is usually blowing up in 2 consecutive red days. Yeah, and that's kind of how the prop firm is. The prop firm, like, don't be discouraged if you're not winning in the prop world. It's hard for a reason. And really in the prop world, what you're actually doing is like fighting against that really tight rope you need to walk when every once in a while the market just sucks, like today. A nice possible bull setup, and then the market just slaps you in the face. This happens, right? So you got to understand that this is part of the game. And as unfortunate as it is, you know, in downturns like this, you will blow up a lot more. And that's just part of the game. But I got to stick to my roots and just still stay with the same setup and the same strategy that I've been using. And that's just kind of what happens. Yeah, and so in prop firms, you know, it's designed such that, you know, if you're levered in that sort of way, you're going to also just bust what you normally would be able to survive in a real account. In my real accounts, I don't like to take these volatile scalps, and you know, I'm very cautious in my real account. In my real account, I just wait for the perfect setups and go. When I know the market's like a hint of bearish or slightly bearish, you know, like I do a lot of like small position trading, like very small. And these prop firms, you know, I'll trade smaller, but I'm still hitting it pretty hard. No way I'm going to be doing like 4E minis or 5E minis in this environment in my real account. Not at all. You know, I'll be trading with like 1, maybe 2 in a real account. But I have a goal that's accepted extra risk, because the risk is not, I mean, it's not real trading in a prop firm. The risk is how many times I have to reset in a month versus the profit I get over the course of the month. The real cost of doing business in a prop firm is how much you paid for your accounts. I'm not going to pay like $50,000 for these accounts and only get a $10,000 payout. That's not the goal, right? So my goal is, can I spend less than $75,000 to get a $75,000 trading account? That's my goal with Tradeify. So Shock says, for whatever reason, you can't get a payout on a prop to save your life, but you trade your own account and you're green the majority of the time. Isn't that crazy? It's almost like the prop accounts are designed to squeeze you. Isn't that funny, right? Are you going to size down your trades at the upcoming bearish and volatile market? Yeah. I'm going to have to. I can't hit daily loss limits every other day. But the problem is that I think what I'm going to do with this one is that when the DD ratio is less than half, I'm not going to size from 5 to 10. I'll still play the 1 to 3 game. That's what I normally do in my real account anyways. I was just hoping that in this environment, I'd be able to get away with it, but I've taken too many losses in these accounts the last week, or last like week and a half, that it's kind of like, okay, my trade big strategy is not going to be good in this environment. And I think once that DD ratio stabilizes a little bit, that'll be time to start taking like bigger pumps at this. I might come back tomorrow looking for 5 as my normal instead of 10. So I'm back to trading like 2 to 3. Because I need to be able to survive daily loss limits. With the volatility, just like today, it's the volatility that got me. It wasn't, the market's in a liquidity pocket. QQQ is nice and stable here. It wasn't getting the direction or liquidity wrong. It was just getting caught by volatility, right? So I think I do have to count for that, Michael. I think you're right. So I think I'll have to have a new rule for Tradeify, which is that DD less than half. I'm just going to kind of like not take my 10 contract normal, maybe make it 5. I got to survive the daily loss limit. If I didn't have a daily loss limit like in my real account, I would have absolutely survived this because I would have been trading like 1 or 2 minis. Or I would have got back in a couple of times. But the prop firm, you just got to like, you can only lose so much in a day. You can't make like, and in my normal account, I can make the bull trade a dozen times. I can trade every liquidity pocket. I keep trading over and over and over. Again, but the props limit you so much per day. You can only win so much. You can only lose so much. So that's kind of the part. Sucks. Ooh, baby. DE less than 50, trade smaller for some of these bullish pivots. Yeah, the overshoot is real on this. Yeah, lost to 1250 max on Tradeify. Dude, I'm right on the edge. The 3750 loss limits. Like, that's what happens. Probably a good thing, right? Simple way you follow, you never buy a violent drop. Instead, short the balance off a violent drop if you get it. Oh, it's not a terrible rule of thumb. Now, here's the thing, though. In certain environments, the violent drop is the long. In many environments, it is. In this environment, it's not. As people are saying here, this ratio showing only 37% of the market cap is bullish. This ratio is a telltale sign that the stocks themselves are bearish. There's enough market cap that's bearish. Less than 50, the violent drops are likely to contain a little bit extra volatility. And so that's the problem. In a market where it's a little bit more stable, the violent drop hits the liquidity pocket and goes. I'll explain to you like a liquidity pocket is that liquid markets tend to not crash. And so liquidity tends to find its support through here. And as you see, it's trying to fight there and it's trying to fight here. This is the liquidity. That's the trade I take every single time. Now, the problem with this is that the market is just so unusually violent that it overshoots before it takes off. So the considerations I take for that volatility is I trade around the pivot. I trade like here and then here and here. To spread out that risk to make it a little easier. But yeah, you're right. So in certain environments, you're catching a falling knife. But usually in most markets, when it's stable, liquidity is always a trade to take. You always bet on liquid markets staying liquid. So unfortunately, when the stocks themselves are bearish, it's having a hard time not having volatility at those liquidity tests. What we call them a liquidity test. So a bear zone bottom is a liquidity test. How do you know? Because when you touched it, the volume was massively huge, right? That's what all of our things do. They predict volume. So while this was a great trade to take, I just don't have any more buying power to do it. But yeah, you're right. What's up, iDoc? You're 800 away from blowing up your funded account. You have to perform tomorrow. A day like today just tells me that tomorrow is probably going to be brutal. So I'm going to say that tomorrow is probably a day I'm going to think about sitting out. I'm already going into tomorrow thinking that it's going to sell off. iDoc, what are you doing? Core PCE tomorrow. In this environment, it's better to let it overshoot and then on the reclaim you take. Yeah, like this, right? So a lot of times I let it overshoot the pivots and then reclaim to hit them instead of catching it while it's red. That is something I usually will do if I have more buying power. Skipping the meeting, you're sick? Dude, I was sick today too. But not in the but in the grossest way possible. You can think of what I'm hinting at. I'm kind of got a little bit of a sickness. Hope you feel better. That's spicy fried chicken, I'll tell you. I'll tell you what. Yeah, that's okay. But all right, if y'all liked on yesterday when we did our boot camp, right? We've been talking about this bear market and what's been manifesting here. And this is incredible to see that there's this like there's this just, and you guys can see it. We've talked about this before. When the green side is sloping down, right? This is on the asset manager side and the committed traders. When this green line is sloping down like this blue line is slipping down, it's telling a story of an illiquid market. That's bad. The last time we had an illiquid market started exactly like here. Right here is when it both started slipping down, like right before this line. Okay. And it just created this kind of market. Now I'm telling you guys, I know it looks bad right now, but it doesn't mean I abandoned trying to trade the bull side. On the ways down, a lot of these bear markets just have really good waves. If there's possible, I'll take them. But we have to be careful because this state means illiquid, completely illiquid. And markets are illiquid. It just has days like this where it's a bull day and it just collapses. So on the timing, I usually tell myself it can be months of bear market and no hurry to bet that this market turns around. If I were to draw this, you guys want to know what I really think is this and then this. We got a 5,500 coming up. Okay. I really do think that. We're doing this kind of stuff. I mean, I don't know if it's going to do that all year, but let me zoom in and draw it a little better. This is what I really think is happening. We talked about this basically every day in our boot camp. Our boot camp is $1 a day, by the way. If you guys can come and learn the risk management and position sizing, it's amazing what we do at our boot camp. I know this market kind of sucks ass right now, but the boot camp hopefully will help you learn how to navigate and survive and to kind of see what things really are. And if you're looking for something like that, our boot camp is going to cost you $1 to come to the class. Let me give you the information. We have thousands of people that have taken this boot camp, and by far, having a blast with it. This is the only time we've been selling this at $1 a class, so you guys can check it out. There's a reason why I do what I do. There's a reason why I'm sitting out. Well, the reason today that I'm sitting out is because I have no more room to trade. But what I do feel like we're going to have is, I think that this particular week is not going to consolidate low and stay. I think we're going to get a dead cat bounce this week. Unfortunately, can I turn this into candles? Hold on. Here we go. Okay. Let's try that again. So somehow when I switched to candles, why they didn't like that. Let's try one more time. That's a little better. Okay. So this is kind of what I feel. This is a weekly chart. I am not going to lie on this one. This, I do believe, is going to low consolidate. And then maybe like this the very next week. Breakthrough lows. Down in here. So I think we're going to flush very rapidly. Pick up some momentum. Retest this area there. It just feels like, I mean, it's absolutely illiquid. We're going to get the waves. And then, you know, some like high consolidation here. And then another slam day. Some low consolidation, lower lows, break, you know, stuff like this. And then finally like flush out. And then get like the big wave. Like this. This, guys, I'm not going to lie, is I think what we're doing. And then this is going to go and not stop. I really think it. 5,500 is the low, give or take, by April. Do I think the yellow lines matter at all? The yellow line does matter a little bit. That's your small reportables. Annuities companies, Federal Reserve banks are all in that category. there's just not enough of their participation in futures to give it some kind of oomph of information. It's like that orange line is just sort of like hovering around 0 most of the time. It doesn't really correlate with much else. We don't utilize it other than it's just another asset. It's just another asset category that's longing. It usually matches the green in the direction of what the green is doing. So the other reportables are usually on the same side of the change as the, hold on, let me close this down. Good question. I love that question. The other reportables are usually going to be like mirroring what the rest of the stuff is doing. Like if there's a wave of buying on the asset manager side, you'll see a wave of buying the other reportables. It almost mirrors. And then like, you know, I mean, it's random because the Fed banks and the annuities companies will be doing something similar, but they're usually like a mix of long and short institutions, which is why it kind of flip-flops above and below 0. But you can see that like they're both sloping down here. They kind of mirror each other just a little bit. Both the orange and the green are sloping down here, and then green and the orange are sloping up here. So that most of the time they mirror. So we kind of exclude it because it just kind of mirrors and hovers above 0. Now this particular, you know, time, it actually is going the opposite, which is neat. You can see that you have increased longs in the asset manager side, and then increased selling in the other category. But just because it's closer to 0, it's just mostly ignorable. But yeah, you guys, I'm not gonna lie, this is exactly what I see the market doing, and I'm a little worried for, you know, having just kind of like a, let's make this the right size. I should make this the correct size. About 55 is about where we're gonna be. Yeah, right about there. Actually, take a little picture here. I think it's that. Oh, I was wondering why it looked kind of weird. Okay, I was like, okay, that scale is off. Hold up. There we go. Let's go back to the weekly scale. It makes a little more sense here. Okay, I'll take a picture. This is what I think is going to happen. Yeah, we've officially had over 1,000 people take the boot camp. It's incredible. We just started doing this. The boot camp is a 20-day seminar. It's 20 classes, 20 days, $1 a class. By far, it is, for most people, if you read the reviews, is a life-changing experience. By the end of it, they come out soaring with a completely different mindset. Correction, not recession. That's what I feel. Which is fine. The market has had one hell of a run. It needs to have a healthy correction. It's part of it. You know, profit taking is part of the whole game. And, you know, let's just understand that the market might be weird until the summer, but no, that's part of what we see. And then doesn't mean there's not going to be some nice bull waves through this, but we might not get these. Remember when you guys were hanging out with Rocket Scooter from July, August, September, October last year, and we were just soaring in a bull market, crushing it day after day after day after easy. Bull markets are so easy to trade. Well, to these bear markets are nasty. So hanging out with us in the kind of a nasty bear market, you're going to see a lot of days that just don't pan out for a lot of people, but that's everybody. You know, the market would be liquidating and selling off if it wasn't shocking everybody on Wall Street. So it'd be like a little sad if your trading performance is taking a hit in this bear environment. It's part of it, right? NVIDIA expert analyst in here. I own 3 NVIDIA graphics cards. Does that make me an expert? I don't know anything about NVIDIA. You've never traded futures in real bull market yet? Trust me when I say, when it gets to it, you're going to be so excited to have real money in your account. You will wake up to 2, 3, 4 consecutive bull months where there was like this is a crazy day where a bull market just capsizes on news or whatever. You will see that most bull markets will very rarely have a capsized day, but like on a frequency of like once a month. It is the best feeling in the world. You feel like a Greek god to wake up and win and wake up and win and wake up and win. And there's bull markets where you saw me on YouTube. I went on like a 70-day win streak in a solid bull market. I didn't lose a single day. 70 days. It happens. You know, in bear markets, it's less frequent that you're going to have good winning streaks. You're going to win and lose like you see me doing. But it just happens. It's part of it. You wake up the bull structure and market clobbers. It's more often than not. Every other day it's going to be bad, as opposed to like one day a month or one day a week is bad. The bull markets are so much easier to trade. So you got to just survive until it comes back. You know, K-Spec, that's the rule. A short off of QQQ MHP was a good setup. It absolutely was. Monthly resilience was negative on NASDAQ. Not a terrible setup if you grabbed it. Or even the short off of 21,117 today was pretty good too. Even paper trading in December was a nice. Yeah, December was kind of mean to people. I definitely noticed trends in the viewer patterns on YouTube based on the markets being crappy. When markets are shitty, people are browsing around to try to look for the trader that's winning. That's the one thing I notice. You guys are struggling. That's what it tells me. And it happens. So by the way, with our boot camp, we give you this really cool handout that goes through the edges probabilities. It actually shows all the percentages and stats of some of the things that we teach you. It's part of the boot camp. You guys have never taken our boot camp. It is in my opinion, it's something I wish I would have had when I was starting off. Honestly, we've designed something for you guys that is incredibly and truly remarkable. And I'm not overselling it. This is what other people say. And it's not designed to make us a lot of income. It's sold at $1 a class, and it's 20 classes, and that's it. And these are the reviews, and people leave reviews day in and day out on this thing. I think we had 1 4-star review by Benny. And they're all, and maybe Froder, but the rest are 5. People love it. And again, these are the people that bought the thing and then they really say they had a good time with it. The strongest, most reliable thing in the space, no doubt. He's very, very enthusiastic about what we teach and how we teach it. I make sure to grill people very much so on practices in trading. It's mostly a class on betting mechanics and how to bet properly in a trade, know when to sit out, when to avoid the market, how to identify the trend correctly, and knowing when the market's weird. So today's the market's weird. As a bull market, or sorry, a bull day, we're still holding on to a bull market, even though it's selling off. The market is flipping. When I say greater bear market, it doesn't mean like 3 or 4 bear candles. It means like a quarter of bearishness. And that's going to be like this. Like the initial red candles is not the bear market. It's going to a bear market. So when all 3 of our indicators are bearish, we're going to wake up with that bear mentality. And you might have a whole quarter of it. The whole process of how I trade completely changes in a bear market. So hopefully you guys can pick up some risk management tricks, position sizing tricks, The goal we teach is how to survive. And these next 3 months are probably going to be brutal, you guys. And I'm going to say brutal for a lot of you. Your goal is to survive in whatever capacity that you have. If you're real trading or fake trading, whether you're plateauing, right? You're at the stage where you're not losing that much. You're not making that much. And you're just kind of hovering, which is like the first stage. The last stage before profitability is called the plateau stage. And most traders experience that. If you are losing money as a trader, you are miles away from the plateau stage. If you are plateauing, you are minutes away from making money. But those minutes may take years. So it's a weird philosophy to think of it like this. If you are plateauing, you are almost there. Then it just could be years or days before you get the next step. It takes usually one major adjustment from plateau to start making money. That's it. Plateauing is the biggest hurdle, and it's yours for everybody. To play this game and to walk away flat is your first goal if you're losing money, is to figure out how to not lose it. And that's kind of a thing to take with you. So if you're making money, then you've won. If you're flat and not making much, you've won. You're moments away. Whether it's a day, a week, years, but you're there. There's only one more step after plateau. And it's either increasing your win rate at the same risk or finding a new strategy at the same risk or whatever. The risk that you take is providing your ability to not lose money. You're doing the risk management and position management correctly. You're just a moment away, the right setup. Maybe you need to trade less or switch to one side or find a stronger pivot or a stronger thing that you do. Focus on the strong thing that wins more often. It's usually one minor adjustment or a major adjustment. Usually one thing you do and you go from plateau to profit. It's that simple. It might take you years to figure out that one thing to do though. But once you figure it out, you get into what we call it snaps. It's the snap phase. So traders, first of all, you're struggling, then you're working, and then you're losing money, and then you're losing less and plateauing. Once you get to the plateau phase, that phase is the discovery of your risk management process, how to keep from losing money. That's it. Hold on, let me... So once you iron out your risk management and prevent yourself from losing money, then you're just one change away from making money. And it's going to be a journey to figure out what that is. Some people, the very next change is like, that was the thing I did. And then we call it the snap phase. Once you snap into it, you found your system, and that's it, and lock it in. So what I say is the viewership is going to go up. Yeah, probably in the fall of next year. But no, seriously. Is your 20-day program the same as the boot camp? Yeah, that is the boot camp. It's the same thing that's in the 1-month trial. Going long now. So, in general, as you guys are trading, your ultimate goal is to learn how to not lose money first, not try to make money first. Making money is a byproduct of surviving. If you survive in the market long enough, you're ultimately going to make money. The market generally moves in one direction most of the time, and it's up. And as long as you're long biased through the majority of the time the market's up, statistically you should make money as long as you survive long enough to do that. Problem is people don't survive long enough in this market. So the biggest struggle you have is surviving. That's the first thing we teach in the boot camp. It's how to survive. How to lower your risk and survive downturn weeks, downturn months, downturn days. So ultimately when the market straightens out, you're ready to go. And once you've plateaued, meaning you're not making a lot, you're not losing a lot, you have good days, bad days, good days. Your P&Ls may be choppy, but it's not like making money and then dying, or you're not trending lower, or you're not blowing it up in a single day. Once you have all that under control, as you guys don't watch me blow up in a single day, that's control. Once you've controlled that, you're good. Then it's only about micro adjusting your strategy to one specific change to either increase your win rate, increase your R&R, something. Take a long only trade, a short only trade, something that is the highest probability thing that you did, and then focus on one step at a time. Make a change. How does it affect? Make a change. How does it affect? Does it increase your profitability? Great. Then stick with it. If it decreases your profitability, don't stick with it. If it makes you take more risk and you're losing money now, don't stick with it. And you're just fine-tuning your approach, and it will snap in place once you make that one. It's usually one thing you need to do additional, and it's a discovery process to figure out what it is, and then you're good. So plateauing is one step away from profitability. It really is. And again, the plateau phase could be minutes away from making money or years away from making money. It's all about you and what you're doing wrong, and you got to figure out what it is. But for most everyone, this journey is the same to get to plateauing. And once you're there, that's where you know that you're almost at the finish line. If you can't ever figure out how to plateau, it's because your risk management's garbage. And lucky for you, you found us. And we're the one people on the planet that teaches risk management. Very comprehensive risk management courses that we teach. That's what we specialize in. We teach people how to get to the plateau phase through adjustments in your risk management practices. Position sizing, where to stop, where to get out, how to identify liquidity and long it, how to identify illiquidity and get out of the way like today. These are risk management principles, market avoidance strategies that get you to the plateau phase. And again, we can't guarantee you will get anywhere with your trading. We're honest about that. But in general, you're not going to get there unless you do something regarding risk management. There's no way you're going to win the market and go to profit if you know how to manage the money you got. That is strictly 100% your goal, most of your goal. That's it. So newbie here, you should definitely, if you're in the 1 month trial, it's going to come with the boot camp. You got to come. I hate this dumb market. You know what's cool about markets like this? I tell myself, I could take a month off and come back and it's probably still going to look bad. There's no shame in coming in here and fighting this forever. Or choosing not to fight this forever. If you're a day trader and you're like, I'm going to miss out on the next big thing, you're going to miss out on anything. This market's probably going to dump for a quarter. It's going to be pretty bad. It's going to need something to turn the market around. I'm going to tell you what it is because I've traded Trump markets before. The moment he goes through and says, all right, guys, I worked it out with China. No more tariffs. On a dime, this market's going to flip around. So you got to be careful believing in trends. This is induced. This is being scared. This is the Wall Street being scared of the initial costs of the tariffs. And that's going to cost Americans money and lower GDP probably and slow down the labor market growth. I mean, it's just going to be, the job market growth. The bottom line of companies are going to come down, and the market's pricing that in. Dynamically, because people don't know how severe it can get, there seems to be no end in sight, and every day the tariff rules change. It's just like 2016 to 2020 all over again. And for somebody that traded through those years as well, this bear market turns bullish the moment Trump goes, psych, no more tariffs. And from there, the market will just pivot and go. He might say that 1 or 2 days. You know, we've decided to push our tariffs out a month. Market goes up. Oh, no, we're going to bring it back on. Market goes down. I swear to God, dude, Trump used this tariff stuff. So I bet you I always just joked around that they call each other and be like, hey, let's talk about tariffs for a week. All right, you guys. All right. On Friday, we all buy the dip. On Saturday, we magically work it out. You know what I mean? It felt like a Wall Street game. Just when you had a good long bull stride, boom, tariffs came. And then right when the market was about a moment from crashing, oh, we fixed it. We solved it. We're working together. Market goes right up. It's crazy how this is exactly the same as that era was. 2017, 2018 was exactly like that. Exactly like that. Chinese trade war was a hot topic in the trading community for years. It was always like, oh, the tariffs are coming in 3 months, and you're like holding your breath, and it comes up, and like, okay, we pushed it out, and now we're not going to do it. It was just insane what it was like back then. And it's the same kind of market we have now. It's the same nonsense. This market is nowhere near a top for the long haul. This is not a recession coming out of this. 10% and 15% tariffs is not going to crash the global economy. It's not. The mechanism of there is just going to make things cost a little more. And the market will get used to that and then start rallying. It's not a big deal. Companies will figure out, they'll adjust, they'll grow, they'll become more efficient. Automation will make them more efficient to be able to absorb those costs. I mean, it's not a big deal. Long from here is valid. If I were to long from here on the bear zone, bull zone, liquidity pocket, I would do a possible short setup. It's literally a 3-to-1 trade on QQQ. But man, I'm telling you, I'm gonna be straight honest about this. I personally, if I was still able to trade today, I wouldn't. It's already done the move 3 times. I know it's an EST setup. The risk is EST, and I mean the probability is there. That we end up in the bull zone. I wouldn't discount it, but I just know that I would make sure I have a stop. As the volatility is slowly starting to climb, the overshoot potential could be real. VIX has been moving higher on a hedge break. We're back at 19.5 on UVXY. So VIX is not going away. The market's slowly becoming more volatile as the day progresses. With that being said, irrational hedge pressure break and a DD band break, the volatility is only going to get worse. I fear that today continues to sell. Did I blow up? No, I just got really close to the daily loss limits in these accounts. That's it. So I don't have any more drawdown to trade with. You think you're getting a 9 to 5 for 2 or 3 months and coming back after? Yeah, everybody go, like literally everybody go wait tables to deliver pizzas and come back in May. You'll be fine. The market will still be here. It'll still be shit. We'll still be fighting the tariffs. And then maybe things will stabilize then. But I honestly am not going to lie. It's Trump, okay? I know Trump. We're buddies. We go way back. Him and I used to trade together 2016 to 2020. He was with me every single day, literally every minute of every day. Trump was right there with me while I traded. We're chatting back and forth. Everything he said would move my market. So this is what it was like. Trump has 2 policies. Number 1, talk shit to people to get them to do what he wants to do. And then as soon as they buckle, then he says, okay, we're not doing it anymore. Number 2, Trump does not want a bear market. He can't handle that. He doesn't want the economy to fail. He doesn't want the market to fail. If he knew what he was doing was risking that, he wouldn't be doing it. He would love to walk in and say, I am the president that took us to 10,000 S&P with anything. So if the market does this, there is something called a fail-safe. And here's your fail-safe. Ready? The fail-safe is your president doesn't want this to happen. And all he has to do is wave his magic wand and say anything that keeps that from happening. If it starts to get really bad, he can say, you know what, guys? None of this stuff. I'm just going to undo it. He will say something to make it bullish. Fail-safe is your president will say something to rescue the market at some point. He will. He just will. If it gets bad enough, he'll start saying things that make you get hope in the market. Hey guys, I think we're going to work it out with China. Literally, even if we're not, he'll just say stuff to keep the market in check. He will manipulate the market so it looks good and bullish. We're still working it out. We're still working it out. Or he might change his plan. All right, it's too much. We're going to change. You know what I mean? I'm saying is that he sees I see a bigger thing in the long haul. I think tariffs are going to have 0 effect on the economy. It affects everyone equally. If we're charging them tariffs and they're charging us tariffs, it's like a wash. There's no loss of GDP from that. The businesses just pay a little bit more money and they pass that cost on to you. But then, like everyone takes an equal hit. Then if everybody takes an equal hit, then nobody takes a hit. That's the best part. If everybody got double their salary tomorrow, then nobody got double their salary. Your double salary will double your spending. Double spending will raise prices because people will be able to produce more, and therefore the demand outweighs the supply. Prices will go up, and inflation will make your double salary become 0 salary change. If everyone gets a cut, no one gets a cut. If everyone gets a raise, no one gets a raise. If everyone gets a tariff, no one gets a tariff. That's how the economy works. So in general, because you're buying and selling from each other, if I buy from you for 100 and you buy from me for 100, And then I buy from you for 120, and then you buy from me from 120. It's the same thing. It's a circle. And so the market will get used to the change, which is the bottom line is going to change at the short end of the stick. But over the long haul, it's not like people are going to get laid off because things cost 15% more, 20% more. There is news today. Trump came out with announcements that that the tariffs were still in play for April and all that, and then they're going to add 10% more or something to China. So I feel. Wait, you didn't get your free class yesterday, Victor? Oh, wait, but you won all 5 of the roulettes, didn't you? I totally forgot, Victor. He's joking, by the way. Every time it spun, he was like, oh, you misspelled Victor. He won all 5. So I think that we're fine. The tariff stuff is not going to be a permanent change. It's going to look bad for the companies on the short end, but on the long haul, it's going to be better. Imagine this. Imagine that company A that produces goods from China or produces stuff from goods from China, pays 10% more or 20% more or whatever for goods from China. And then they rearrange their stuff logistically to buy something from an American company that might cost 10% more, but then they save 20% from the tariff. American made. It's a twofold change. Number one, the first quarter, we dip on that tariff, then they readjust their logistical stuff, and then the second quarter, you get a boost on earnings because they somehow found a new supplier that's local. It costs less than the tariff. Okay, then on that good earnings report, we rally. And then that was an American company, which made more jobs and more American GDP. And then that reading came out, and then the market bumped again. Like, it's a dip now, and then it's a rally later. Tariffs are a dip now and a rally later. It's always been the case. And the problem, and I think Little Blue nailed it, is that they just won't pass their price on as their cost increases. They'll push prices even higher. It's like how corporate profits spiked during COVID and have only skyrocketed. The problem is that if you give people the option to compete, if they raise their prices too much and their competitors don't raise their prices, then they'll lose market share in this short period of bearishness. And I don't think a lot of people want to do that. That's my one concern. Is that you're absolutely correct. Is they may push the price on the customers, but if there's 5 companies all sitting there handling with the same problem, the one company that doesn't pass its price onto the customers becomes the dominant company in an environment if the price raises too much for people to handle. If you're going to buy, I don't know, name something, company A or company B 20% more, which one do you go with? So I think competition, because it affects everyone equally, will mean that prices will change if they go up slowly. I don't think it's going to be a drastic thing like in COVID. COVID was a different story, right? Because everything shut off all at once. Everyone was dealing with going from a regular supplier to zero supply. That was a really hard adjustment. That was really quick. This one's kind of gradual, right? So I agree with you, Little Blue, that we're going to get gradual price increases, but it'll be slow. And competition will keep people from like adding 20% to their prices overnight. You know what I mean? Because if it becomes 20% more expensive to sell something, Walmart that chooses low-cost items might just go out there and shelve things that people don't have to deal with that tariff just to get low prices in. So there's a lot of checks and balances to keep companies from jacking up the price, the cost of the tariff. This is how I feel. And so while the prices will likely go up across the board, it will be gradual, just like inflation, I think. You don't get any conspiracies, but I think there's too much overlap between board members of large corporations. I don't think that's a conspiracy. I think that's true. I mean, the banks got together and decided who was going to hold the risk during 2008. And they were like, we need somebody to buy Bear Stearns. And then they were fighting with each other as to, I don't want to buy them. I don't want to buy them. Somebody needs to rescue them. Well, let's all buy a part of them. And people voted it down and didn't. This is what it was like. It is like that. You're absolutely right. But still, though, in an economy like this, there's always that one company that right now is planning ahead of this. Like, you know what? I can get an American supplier. It's 10% more expensive, but it's not a 20% tariff. And let me make a special deal with that supplier. let me sign with them for 40 years so I could get even better cut on my prices. And that American supplier is like, holy crap, we got great business guys. We need to hire like 5 more people. And that's 5 more salaries. And that's 5 more shoppers. That's 5 more people putting money into 401ks. That's a boost to the American GDP. That's a longer term boost. But that one company slowly starts to steal market share in the environment where the people that previously were dominant are now stuck with higher prices. And Amazon did so well because you can buy cheap shit and get it delivered fast. If inflation is a problem, then price competition is going to be brutal. And the companies that figure out how to migrate to like this new system and navigate through these tariffs will be slowly stealing market share, I feel. Basic stuff. I mean, you don't even know what kind of things this will affect. Kitchen towels, bath mats, coffee cups. You don't know what out there is going to have this effect. What items are going to really experience the tariffs? It's going to really hurt the consumer that much. I feel like people are in a good spot right now. You know, people have jobs, people have incomes. Things just cost slightly more. It's not really, I don't really see a lot of people struggling now like they did during COVID. Like they lost their jobs. So somebody said customers will go to the cheaper price point once you pass along the cost. Oh, he says 100%. Yeah, so the reason, and the competition keeps price raised gradual. As you see, Netflix slightly rose their price. Amazon Prime slightly rose their price. You guys notice that, right? Spotify slightly rose their price. These streaming services are inching their prices higher. Netflix could just come out once everybody has a sub and go, all right, psych, I know it was $15 a month. Now it's $40. Good luck. People will go to one of the dozens of other streaming services. So in the face of your competitors, people raise prices just slightly as they observe other competitors raising prices slightly, and it does okay. And then you can say, the consumer is okay with that. Let me raise mine a little bit. And that's normal. That's how inflation normally works. People raise their prices slightly because you're paying more, you're spending more. Economy's healthy, so the probability is higher that you're buying stuff for longer, and then people raise their prices. You can squeeze a little bit more dollar out of you, cover the cost of expansion and all this. So I agree. Tariffs might be passed on to the consumer, but companies have to be very careful about how quickly they do that because they risk losing market share if they go too high. You can go a little bit, but if you go too fast, you lose a lot. So, I mean, this candle's the bottom. I'm not hoping for anything. I think this market's going to fall really fast today. I wouldn't be touching this. Volatility is increasing. This is the one major key of this. Again, I'm not giving investment advice, but we do have a VIX break, edge pressure break right here, and it hit MHP, and VIX is slowly starting to trend up higher. This is only becoming increasingly more sensitive to price movement. As a matter of fact, I wouldn't be surprised if this is the day that did this. I wouldn't be surprised. I would not personally be betting on the long side from here. Now with increasing volatility, VIX hedge break, DD band break, catalyst active, this all is just nasty. Nothing across the board. It's going to need a boost from something to flip it around, unfortunately. So, on a technical reason, this is not a market I try to grab a technical long. Mike says, estimated that 70% of the goods sold on Amazon are produced in China. Yeah, I wonder what this is going to do to Amazon. Hope the market drops so much that Warren Buffett gets scared. There you go. You're praying for you anyways. Yeah, we are praying for you guys for taking the trade. This is a tough environment, right? Victor, dude, I don't disagree with you. Monthly maps show that it's pretty brutal through April. So March is going to be bad. April is going to be bad. Doesn't mean crash bad, but it means we're going to have very big volatile waves. The volatility is present in the maps. We already showed you guys that yesterday and today. It's not getting better. And the volatility doesn't mean the market's going to drop straight out. It just means that the market's going to have really big waves on the way down. We're in a bear market, so the trend is the market's going down. The volatility is all over the place, and even worse in March, and even really bad in April. So the market is going to have big ass waves over this time, okay? Remember, volatility is the average, these distance between these candles is the average expected weekly range. and you look for the course of the week, and the worst one is what you're expecting to see. So this particular case, right? You have QQQ at 523 and at 515. That's about 100 points. And these candles, 517 to 507, is about 100 points. The space of the week is expectation of the week. Okay? The worst space of the week is the expectation of the worst space of the week. And I hate to tell you guys this, but next week is scary. Okay? Scary. There are illiquidity volatile pockets here in this range that show QQQ. It's like 300 and what is it? Oh, wait. 530, 496. That's 35 points in Q. It's 1,200 points in the NASDAQ. That's 1,200 points of range on NASDAQ. I need to tweet this. I need to warn everybody. Liquidity monthly maps don't lie. We talk about this. This is incredible. This is the alarm here, where that pocket can possibly be next week. 530 to 495. 35 points of in Q. Of QQQ. And that's what times 40, right? That's 1,400 points. That's crazy. Possibility. That's scary. Monthly maps don't lie. Wait, what did I just do? Oh. I was wondering what happened because I drew this on the wrong thing. Oh. I'm so funny. Hold up. LOL. I was like, that makes sense why it was a different color. It didn't show up on the screenshot. Hold on. Draw here. 1,400 points of NQ. So remember, that's where there's a pocket of illiquidity next week. Next week. That's so crazy. How many raw points is that? 1,400. That's like down to that's down to 20,000 again. It puts us close to like right? Like that bear zone top is where liquidity is. That's like the one sad part about this market. We look at these reveals here, and that looks like to be next Friday as well, right? 5th, 6th, 7th. Okay, so what day is this? February 27th. Today's Thursday, Friday. Wait, so that's Monday, Tuesday, Wednesday. What news do we have next week? What the hell's happening next week? PMI, non-farms. Pretty busy news week. ISM, the PMIs and non-farms. It's a decent slice, and it's non-farm week. Oh God. Well, that's enough of a catalyst to do it. Shit. That's a really nasty week. And you guys can see that even without this one like alarming day, that volatility is here, it's present all the way through. This is massive ranges. These are 400 point ranges, you know, day after day after day. This is on the day. So the worst one in the week is what you expect the worst of the week to be. These are daily ranges. So daily ranges, you can have 400 points in NASDAQ day after day after day after day for weeks. Short at MHP for ES. The bulk of today's move is done. I'm personally not doing anything. But if you're looking at trades to take, God bless you, sir. Look, S&P's no better. S&P's got a 150 point range per day. And the worst range of the week, I look for the worst possible scenario. The S&P is looking like, you know, we have 605 down to 590. That's 150 points of range move for the week of next week as well. So, I mean, it's just like, it's pretty gross. So, monthly maps are good with what they do. So, yeah. You're trying one micro? Yeah, good luck, guys. The 4th is when tariffs go into effect, yeah. I'll be right back. I'm gonna take a quick restroom break. Be right back. Your advice to new traders is right. Don't go anywhere near intraday drawdown accounts. Intraday drawdown accounts are the worst. No, don't trade them. Avoid them at all costs. Avoid companies that only have those two. If you can't get end of the day drawdown or static drawdown accounts, the prop firm is going to be stealing money from you. You won't have a fighting chance. All right, guys, don't forget when it comes to your, I'll let you guys know. We've been running Take Profit. Right, if you guys use Take Profit Trader, that's kind of the new one that I'm leaning towards, like looking into. They're great. They have the best rules. I don't even know why their rules are so good. I'm still trying to find a loophole. But Take Profit, by far, is the one that has the most lenient rules, and I don't get it. It seems the easiest one to get funded and get paid out. As everybody's telling me, Take Profit's the sleeper hit. I'm going to try using them to see what it looks like after I'm done with the Tradeify stuff. But we get a discount from these guys. We're slowly climbing up, actually quickly climbing up the ladder. Trust me when I say, when it comes to us using this new thing, there's a commission structure that goes like to the tiers. We've probably had this Take Profit code for what, like maybe 2 or 3 weeks or something. Maybe 2 weeks, maybe like less than 2 weeks. I don't know. We just started doing it. It's pretty new. It's 50%. Did I say 50%? What did I say? 25%? Oh, I'm sorry. Don't listen to me. I'm stupid. Hold on. Oh yeah, no, I'm an idiot. Okay, I've been saying this wrong the whole time. It is 50%. Our commissions go up. That's what the tiers are. I completely read this wrong. Okay, so let me go back to here. It's 50% off. So let me adjust this over here. Don't listen to me. 50% off. My commissions are going up, which is good, but whatever. We're almost at like diamond tier within like 2 weeks. It's my commissions. I'm such an idiot. Whatever it is, I thought this is how dumb I am sometimes. I'm very smart most of the time. I'm dumb sometimes. It's 50% off for you guys. We get more of it the more you guys do. Y'all bought so much of this stuff in the last 2 weeks. We're almost at the diamond tier. It's just more. It's more money for Rocket Scooter. So, thank you, Mooney. Yeah. You're studying to be a new trader right now. You're reading books and watching live trading. Is there anything else you can do? Gonzo, look, I'm going to tell you, you need to do this today. You are more than welcome to come to our live trading boot camp. It's $1 a day. If you're doing anything for $20 over the cost of a book, come to our boot camp. This will be 20 bucks of your money. I promise you this. It's just like a book, but it lasts for a month, and you'll come train. There's thousands of people that have done this thing, and we have a huge community, about 10,000 users of our trading platform. Here's the link to read up on it. You can watch the video or you can read the reviews. All the people taking the boot camp are here. If you're studying to be a new trader, we teach you futures trading, how to beat prop firms, risk management, position management, all that stuff. It's a class on betting correctly. I'm a trader that is live funded trader with ETF. I got promoted to their live program. I am trying to get promoted in this Tradeify world. So I'm teaching you guys how to navigate through this world of new trading, like new traders and prop firms and futures trading. March 4th is also worth sale monthly maps. Yeah, you can do it in your own time, Gonzo, and it's live as well. So all these people in this YouTube, this is the end of the YouTube stream, but like at the start of the day, we usually have like 500 or 600 people here, and usually as the day progresses, people go on about their day. Our Discord community has we have 10,000 active users of our platform. Our Discord community's got roughly like 7,000 something people in it, and everybody here has gone through this boot camp. And you can watch the videos in your own time. There's handouts, there's cheat sheets, and we teach you risk and position management. If you haven't learned anything else, I'm so glad you're coming here first. Everybody, tell him what he stands to benefit. Like why it's good to do this for anything else from your perspective. Don't let me sell this guy a thing. I'm a horrible salesman. That's why I only charge him $1 for it, for the class. Tell him why it's good to learn from us first before you learn anywhere else. There are or videos. There's handouts. You get cheat sheets that walk you through stuff. You can take it with you. We teach you all kind of stuff here. So somebody here that's been to the boot camp, that's awake still. Tell him why you think, as a first-time trader, it's useful to learn this kind of stuff first. We kind of run you through the core of what the market's about, how to find liquidity, how to find pivots, how to find volume, how to bet around it. It's class on betting. K-Spec is one that's gone through the... At minimum, you walk away critically thinking differently about the market. And what it's going to do is, I promise you this, the amount of stuff that we got here for you, Gazo, will make it to where everything else that you could actually waste your money on or spend your money on will seem very, very juvenile and very kind of like a waste of your time and money. Well, people, after they do our boot camp, they realize, they go, man, everything else out there was just so like basic, and you'll pay a lot of money for basic stuff. People sell boot camps for like thousands of bucks. And our goal is to make sure that we give people the right education quickly. And that's why we only made it $20 for the month. And that's it. And like, we sell a trading platform. That's where our business is based on. So I built this trading platform you see me using. And most of our customers use that. But we open up this cool boot camp as a side thing. So people use our platform, get the boot camp for free. But for people that don't use it, we just decided to make it just cost $1 to come to a class. And it's been very rave reviews on what it's done for people as far as like teaching them about the market. And what people say is they go out in the rest of the world, and there's a lot of trading information out there, and we kind of give them a really good BS indicator so that you can kind of see what else is out there is just kind of fluff or kind of a waste of time. And you get a good sense of what really makes the market move. And then you'll understand that when you're learning something else, I think people here can say that after we teach them, when they're learning something else, they realize there's an easier way to spot something phony out there after the fact. Like if I took my own boot camp and I go out there and someone else is trying to say, hey, let me teach you trading, I'll sell you something, I'd be like, I could sit with them for 10 minutes and realize, oh God, this is not even close to the level of what I'm expecting. Right? You know, you pick up a book, right? And it just looks like it's real basic on page 1 or page 2. You know, that's kind of what it's like if you go through our stuff. You can really easily self-direct yourself into a place that is a lot less misdirecting. Saying it without saying it, you'll be able to spot a fraud pretty easily. Or spot something that's going to waste your time and effort pretty easily. You realize very quickly what is built by people that don't have a clue and what's built by people that have a clue. But more importantly, teaching how to critically think about markets is very important. And when I started, there were all kind of resources, like a lot of books, there wasn't a lot of YouTube back in the day in 2010 when I started, but there was, books for sure, and books written in the 90s and books written in the 80s. There's a lot of stuff that was applicable. Some of the stuff was outdated. So it was really hard to like, where do I start, right? The key principles of like learning how to trade is more like, accepting the fact that the stock market's random and that you have to learn how to lose properly when your setups don't work, bet correctly at the right times, account for volatility and things. These are basic principles of the market that's really hard to find a good teacher, I feel, on that kind of stuff. So the short at MHP paid off. There you go, baby. All right, it's now almost noon. It's time to go. Brutal day. We hate when they happen. But it happens. So don't forget, guys, we're going to be here at 3:30 today for the courses. We'll see y'all there. All right, we'll see you up front center live tomorrow. Good luck, guys, and just be careful. This market's brutal.